Hello everyone. Welcome to ZaranTech. In today's dynamic financial landscape, effective treasury management is crucial for organizations. SAP FSCM Treasury Integration with SAP Finance offers comprehensive solutions to streamline treasury operations and enhance financial visibility. Let us dive into the world of SAP FSCM Treasury Integration with SAP Finance. In simple terms, it's a powerful tool that allows businesses to streamline their treasury operations within the SAP ecosystem. From cash management to risk analysis, this integration ensures that your financial processes are efficient and effective. Businesses integrating SAP FSCM Treasury see up to a 30% operational efficiency boost. With 90% plus Fortune 500 using SAP, mastering this is crucial for competitiveness. In today's fast-paced business world, optimizing treasury operations with SAP FSCM integration is key. Minimize risk, maximize liquidity, and drive profitability for your organization. In this course, we'll cover everything you need to know about SAP FSCM Treasury Integration with SAP Finance. From understanding the basics to mastering advanced techniques, we've got you covered. So, get ready to dive deep into cash management, liquidity forecasting, risk analysis, and more. But before we begin, please subscribe to our YouTube channel and hit the bell icon to receive regular updates from us. Now, let us take a look at the agenda. Agenda 1. Introduction to Treasury. 2. Integration with FI. 3. Risk management. 4. SAP TRM. 5. Market data integration. Let's dive in.
So this is a disclaimer that I was told to give. So basically we have some examples, images, references for informational purpose. And we have to also comply with the copyright laws. Without limiting the rights under copyright, no part of the document can be reproduced, stored, or introduced into retrieval system or transmitted. Credits shall be given to the images taken from open source. So it's standard disclaimer. We can move to the next. So basically what I have tried to do, I've tried to, combine the first 3 or 4 topics into one master presentation where we can cover the basic introduction of treasury, then the integration part with FI, which is nothing but the account determination part where the accounting entries get posted. Then we'll be covering the reporting and the analytics part, which is again the end goal of the treasury. We have certain risk management part also covered here, the basic, credit risk, market risk analysis kind of things. Although these tools are not being very widely used nowadays because we have more advanced credit management, etc. And then the final part is market data, where, as you know, there is capability in S/4HANA Treasury to integrate the interest rates or the exchange rates with third-party tools like Bloomberg. And we can have certain scenarios in Treasury where we are creating a loan with a floating rate or a variable rate. And those are all market linked. As you know, Fed has been increasing the rates for last 1.5 years. So those floating rates keep changing. So in case your loan is having a US LIBOR rate, then those things can be linked with the market data. So that is the last part of the things that we're going to cover. So this combines all the 5 topics and we'll be starting. So we may not be able to cover everything today because today we're just going to focus on the introduction part. But not to worry, we'll try to cover the rest of the topics tomorrow because we have got 5 topics that we'll be handling over the next 4 classes. So basically, the treasury functionality is a process or a capability in S/4HANA which is used to record, process, and report on certain instruments like debt, investments, foreign exchange, trade finance, and derivatives. So basically, if we talk a little more in details, so basically, let's say when you are giving any loan to one of your subsidiaries, or if you're taking any bank loan, for example, In that case, you can create a debt or a loan instrument in your system. Now, whenever you are having a loan, you have to record your principal, that how much loan have I given or how much loan have I taken from a bank. You have to pay interest at the end of a quarter. So it can be linked to both the principal, the interest, and there can be a lot of month-end activities also linked to the debts or investments. Like for example, often you would have heard something like accrual or deferral, right? Can anyone of you, uh, I hope you guys are all from the finance background, you are used to accrual or deferral kind of terms. So let's say if you have a principal, let's say if you have taken a debt and if you have an interest expense that you are recording every 3 months or in a quarter, then in accounting we also accrue those expenses every month. So treasury system has capability to record those accruals and deferrals also. Foreign exchange is something that comes into picture as part of spots or forwards, right? So let's say if you have any foreign currency payment that needs to be done, because let's say if you are procuring some, let's say if you're an Indian company and you're procuring goods from China, in that case you have to pay the Chinese company in their own currency, let's say Wuhan, after 3 months. So now that liability is sitting in your books for next 3 months, and you want to protect yourself from any fluctuations. So that's where the foreign exchange can come handy, where you can take it forward. Uh, this also applies for the IT companies. Let's say TCS has given some service to one of its US clients, and TCS is supposed to get money in dollar after 3 months, which is a receivable in our books. Right? So that receivable will stand in our books in dollar, and let's say TCS wants to protect itself from any dollar rupee fluctuation. We know the dollar is quite high now, but let's say the Fed decreases the rate after 3 months, the dollar may fall. But I want to just capture the high rate as of today, or I just want to hedge myself against that. So in those cases, foreign exchange spots and forwards can come in handy. Trade finance is something that we use for protecting ourselves from any kind of risks that happens during export or import. Let's say if you're procuring some goods from any foreign country, often your third party will ask for a LC or a BG, which is nothing but letter of credit or a bank guarantee. Those things come under trade finance. And again, derivatives are more of hedging instruments that we take, let's say speculative instrument. Let's say we know that, let's say the interest rate is rising. So you want to hedge yourself against that. So that is more of a speculative instrument that we can create as a contract. So all these treasury tasks are distributed across treasury manager, transaction manager, and risk management. So transaction manager is something that will come handy for you, because as you have been mentioning that you have money market, right? So money market can have different products, and those products will come under transaction manager, but you can create different kind of deals or contracts based on the kind of product that you have. And then again, we have got risk management. There are different kinds of risk management. It can be exposure management, it can be hedging, and this is how you control the company's risks. The transaction manager can be used to optimize the yields and cost structures, and it also supports the management of financial transactions and positions. So basically, whatever yields or cost you have, and let's say you want to optimize those things, that's what treasury and transaction manager can come in handy. You can easily get a liquidity report, you can get different kind of positions, and that will be helpful in decision making for you. Now SAP S/4HANA treasury application helps finance department to manage financial risks, instruments, cash liquidity, and payments, as we discussed. So basically this slide talks about the benefits of using an integrated treasury and cash management. This helps in more accurate prediction of cash impact on the company. This facilitates better organization and effectiveness of corporate treasury function, as well as integration with operational and enterprise finance and accounting systems. So basically, if you do not have treasury module, let's say if you're tracking everything in an Excel sheet, the problem is, in case your company is using a lot of treasury functions like loans, investments, or fixed deposits, or forward hedging, etc. In those cases, everything will be journal entry, and it will be very difficult to integrate certain things. Like we spoke about accrual. Let's say if you want to accrue your interest expense on a monthly basis, you cannot use a system. You have to calculate everything manually in an Excel sheet, and you have to post it as a journal entry. So that will be a lot of manual activity for you, and your reporting may not be real time. So that will cause a lot of issues for you. It will not be an efficient system. But if you do implement SAP Treasury and cash management, it can lead to better integration with finance. Because as and when certain things are happening in Treasury, you are able to automatically integrate that based on the transactions or based on the jobs, etc. Right. So that helps in better operational efficiency and effectiveness, as well as more accurate prediction of cash. So basically, see, this slide speaks about that, the money market products. Like under money market products, we have got different types of things. One is called term loan debt products. So it can be working capital debt products. Then there can be non-fund-based trade finance and investments. So here we have got under term loan debt products, we have got long-term loans, intercompany loans, related party loans, FX loans. So basically, this talks about the purpose of the loan that you're taking. You can take a long-term loan for your company. You can take a, let's say if you have MNC and if you've got a lot of sister companies, and if some sister company is cash positive, you can think about taking intercompany loan. There can be related party loans from one of your entities. Maybe let's say for some, you have something like Reliance. They have so many related party. It can be related party loans based on from which, let's say if Reliance Retail is taking loan from Geo, it can be related party loan. There can be FX loans. You're taking a loan specifically to mitigate your forward hedging. So based on the purpose of the loan, we categorize different kinds of loans. Again, here can be unsecured and secured loans also, right? Then you have got working capital debt products. So here, let's say if you want to just meet your working capital, that can be short-term loans or a packing credit or even a AP financing and air factoring. So this is nothing but, let's say if you already have, to take an example, let's say if you have already sold some goods to your customer, and let's say you're supposed to get the money after 3 months, but you need that money right now to meet your working capital requirements. In that case, you can take a factoring loan, which means I'm taking a loan from a bank against my invoice. There can be certain loans like that. Then we have got trade finance like LC, standby letter of credit, bank guarantee, corporate guarantee, all these things. So these do not have any accounting entry impact. This trade finance is something which is more like your way of integrating with sales and purchase to ensure that in some unforeseen cases you're covered. That is where trade finance comes handy. And then you have got investments, which can be a FD, which can be even a equity, right? So these are some things that comes under money market products. We have got term debt products. I've even given the product types here. You can look into it. So this also covers certain things are coming under which bucket. Like you have got SAP Treasury Risk Management, where you have got all these things like market risk, exposure, hedge management, limit management, money market, foreign exchange, derivatives, loans, trade finance, securities and commodities. So all these things comes under core treasury, which we'll be talking about in the initial period. Then we have got something like S/4HANA cash management. We're going to cover cash and liquidity management also is in module 2 of our course curriculum. But we have got BAM, bank account management. Now, bank account management is something that is more like S/4HANA functionality that previously we used to use in ECC as a payment run, all those kind of things. Even a house bank master data can be part of bank account management. So these are all normal day-to-day banking activities which we perform through payment runs for vendor payments, etc. Then you have got cash applications. Cash application is more on the AR side where you would receive payments from your customers. Then monitoring of the electronic bank statement that happens to something like FEBAN or FF.5 where you can basically upload your bank statements. It can be automatic, it can be a manual upload depending on your client. Then you have got cash operations, cash forecasting, cash flow analysis. All these things come under the cash management part. How you're going to get a short-term forecast of your cash. Then there can be payment approval. So again, this is coming more under the BCM side, the bank communication management side. Payment approval, internal, external payments, where whether you're going to make a payment as an in-house cash or whether you're going to make a payment to your external vendor. Then there can be a monitoring of payments through BCM. There's something called BN_warning where you can monitor your payments. Again, we have got in-house cache as a separate module where you can go more deep inside. We're not covering in-house cache in this course, but we have something like in-house cache where you can basically use, your intercompany payments can be again handled through in-house cache, where you can create your own internal bank and you can actually create payment orders. That is another capability in SAP. I think FSCM is something that you guys are also aware of, right? Credit dispute collection related. And again, these things will be coming under the BPC side, business planning part, which is not exactly treasury, that comes under a separate module altogether, which is the long-term forecasting part. Okay, so this gives us a overall picture of, let me come back to the slide, BP. Any other questions before we move to the, so a business partner in the role of counterparty is a contract partner in a financial transaction. So basically, the basic master data for a treasury is a business partner. And generally, we always extend the business partner in the role of a counterparty. The treasury BP role is used for bank, counterparty, intercompany general and company code data. I think you guys are all used to business partner concept, hopefully. So previously in ECC used to have vendor, a customer separately, but in S/4HANA I've combined everything into a business partner. What differentiates a business partner between different modules is its role. And in Treasury, we use a role called counterparty very often. It can have other roles also. It can have roles like an issuer, it can have roles like a bank, etc., depending on the exact transaction. But one of the most common roles is counterparty that we use in S/4HANA. All the treasury business partners, whether external or internal, will be linked to counterparty. And okay, so this is not correct. Actually, I've used this from my previous client. In our previous client, we have used it at a customer role because of certain design discussions. I've taken that presentation from my previous clients. That's the reason. But it will be linked to counterparty, as was explained. Now, BPs or counterparties are used to conduct treasury transactions will be maintained in SAP. It's for the master data. So basically, typically in implementation, we have to first upload these BPs as a first step, and then only we can actually conduct our treasury transactions. Standard BP roles for treasury are as follows. So as you can see here, these are the name of the roles: 000 general role, TR0151 counterparty, and this is again I have taken from my previous client, so it shows FI customer role. This can be actually ignored, FI customer. So this is again basically just letting us know what help it does. It helps in reducing time spent on combining data, accessing several banking portals, product bookkeeping, analyzing and solving tough database formulas, Like let's say if you have to calculate in interest, sometimes it can become complex, and it's very difficult to use database formulas or Excel formulas. So that can be helpful through system entering information, again building important manual reports and dashboards. So these are some of the things that we can avoid if we use treasury. So let's say depositing rupees 5 lakhs in HDFC Bank, or maybe I'll just take a US example. Let's say Wells Fargo Bank. So here your company code is 1000. It's a US company code, and you're depositing $5 million in Wells Fargo. So your first step will be to create Wells Fargo as a counterparty. So let's say this one is becoming AWESF 00. Let's say this is a VP. This is the first step, and this has to be created in counterparty role. Once this business partner or counterparty is created, then you can create a deposit. So let's say you're creating deposit 55A as a product type with 1000 as company code, and you will take this one as your business partner. In this is simply FTR underscore create. If you just check this as a T code, you have to go to this T code. You have to create a deal, 1000 company code and AWS F00 as a DP with whoever you are basically doing the transaction. So let's say here you're depositing your money with Wells Fargo. So Wells Fargo becomes your counterparty. Let's say if you're taking a loan from Wells Fargo, then it can be again a similar one where instead of depositing money, you are taking a loan from Wells Fargo. It will be a bank loan. It can be a Bank of America loan. So whichever bank with whom you are doing the transaction with, that will be your business partner or counterparty. Treasury also supports you in managing the cash and liquidity efficiently across enterprise, in identifying, quantifying, and managing financial risks and evaluating financial transactions in compliance with international and national accounting principles. In addition, flexible and comprehensive reporting is provided. So as you can see here, we have got this payment and bank communication management here. We've got cash and liquidity, and we've got treasury risk management. So if we use these three modules efficiently, it will help you, running your enterprise properly, quantifying and managing your risks, all these things. And obviously, better and more enhanced reporting is always there. So that is the advantage, and that is the reason we're using SAP Treasury. Okay, so Treasury Workstation is a new functionality in S4HANA that has been enhanced, that has been basically created, that helps in central treasury processes in hybrid landscape, in which the liquidity and risk management, as well as the management of financial transactions and positions take place. It is integrated with distributed business systems from which it can obtain data or to which it transfers data. So basically what it is telling is that, let's say there can be cases, I don't know if it is true for your client, but there can be cases with some clients that they do not use a single S4HANA system. They can use multiple treasury systems. They can use, let's say, a couple of treasury tools, or they can use Bloomberg or FX, and they're also using S4HANA for certain functionality. But you want to get an integrated functionality to report your data or to report your cash liquidity or your exposure. In those cases, we have a functionality called Treasury Workstation in S4HANA, which can be like a central reporting tool for you. Some people may have heard about central finance, right? So central finance is quite similar. Let's say if your company is in ECC and if you do not want to implement S4HANA, you can bring central finance, which has capability to take report from ECC as well as other ERP platforms. You have something very similar, may not be that large, but just a simple treasury report where you can take your positions or your transactions in one board, right? So this is something that is again a new one that has been introduced. So this talks about certain overviews that we have, uh, for example, you've got Bloomberg, showing here. There can be many other third-party tools. Bloomberg is one of the most common ones that we use. where you can track your floating rate interest, your exchange rates, your yield curves, your volatility. All these things are tracked in the market. Then through the market data management, we can bring all this data into uh, SAP S/4HANA. Then, as I was explaining, we have got a business partner where you can have banks or financial institutions, depositories, issuer, counterparty, all this kind of things can be mapped onto the business partner. Then we have got different product types, as I was explaining, like loans, trade finance, swaps, equity investment. There are different kind of products. So when all these things are combined, when we get the Bloomberg data, when we have the master data in place, and when we have the configuration in place, if you combine all these things together, then you can basically get a certain process flow. So this is what it's the first step, which is called the deal creation, right? We can create a deal based on the business partner, based on our data in the Bloomberg. Let's say if you have a foreign currency variable rate loan, then you need the exchange rates and you need the floating rates. You may need the yield curves also at certain point, and you can bring all these things into the deal. You have to create a business partner as a prerequisite. You have to configure the product types, and then you can create the deal. You can basically settle the deal, then you can do the valuation. In case it's a foreign currency loan or investment, you have an additional step called valuation, and then finally the deal will be posted. This is a basic treasury process flow that is shown here. So let's say if you have something like interest rate swaps, right? Then yield curves become very important, because let's say, for example, you have an interest instrument in India. Let's say it's a fixed instrument, and you, let's say, have a floating instrument in Europe, which has a exchange rate, which is an interest rate of 3%, and in India you have a fixed rate of 7%, right? But let's say your company is planning to invest some money in Europe, and let's say they want to start a factory. Similarly, a company in Europe wants to invest their money in India and wants to build a factory in India. So let's say, as a foreign company, if you go to Europe and if you try to start a new factory, you have to pay very high interest to get that same loan. And similarly, for a foreign company, if they want to come and get a loan in India to build their factory, they again have to pay very high interest, because let's say the companies like SBI or HDFC may not know the foreign company, but your company may be a good brand here. And same goes for the European company. So in that cases, based on the yield curve that is present, yield curve is nothing but basically the interest rate, whatever interest rate is prevalent in the market, and whatever you can predict in the nearby future, that gives a yield curve to us. So based on that, different institutions actually keep a track of the yield curves, and based on that, if you think that instead of directly going and taking a loan in Europe and setting up a factory, you want to swap your interest. Let's say if you have a existing loan of 1 crore, and then European company has an existing loan of, let's say, 5 million, and both are almost equal to each other, or there can be certain institutions which can club certain loans together to make it an equivalent amount. Then you basically swap those interests. So that is where this yield curve becomes important, which you can take from the institution, and based on that you can understand whether it makes sense for you to do the interest rate swap, or whether it makes sense for you to actually do a direct loan from the European institutions. That is where
Okay.
this is come handy for us. Okay, so then we have got different sub modules in Treasury, like hedge management, money market reports, and investment reports, which can be useful to us. So again, in hedge management, there's something like balance sheet effects, exposure report, interest rate risks, FX forwards and swaps. And in money market, they've got something like debt reports, trade finance reports, fixed deposit reports, all those things. You can have investment reports also. It can be equity report, it can be a investment hedge report. So these are the things through which you can do classify treasury into further modules, and you can handle these things. I think this is very similar. I've just tried to segregate this into more details, like term loan, debt management, money market investment management, hedge management, equity investment management, working capital debt management, trade finance management. So these are more like the names of different uh, submodules that I was showing earlier. Okay. I think I have covered this slide. Whatever we have showed here, we've just tried to break them down into different kind of smaller products with some examples. So these are nothing but different product types. So I think people who are working in treasury are probably more familiar with product types, right? We've got something like, if I just show you the basic screen. Okay, so this is a transaction code called FTR create. Are you guys familiar with this T code? So this basically helps you in creating any kind of product. You don't have to be very specific. We have got certain T codes to get into specific products, right? Those, let's say if you want to create a fixed deposit, you can, let me show the Fury also, so that, because right now people are more interested to see Fury, right? Yeah. So this is a Fury app for creating fixed term deposit. Let's say similarly, if you want to create a deposit at notice or a commercial paper, uh, you can basically use different Fury apps. But in GUID, we just use font decode FTR as create, and we can come to the same thing. And we can basically choose the kind of products that you want to create. So that's the flexibility. So anyway, we can try to create here also. I'm going to use the standard. Okay, you can see here there's a lot of products. This is the standard products that we have by SAP. We've got many products. So see, product types are nothing but basically it's a standard way in SAP to understand what is the kind of transaction you're trying to create. Like whether it's a fixed deposit or a loan or a bond or a stock, what exactly you're trying to create. That is what is product type for us. And every product type will be linked to something called transaction type. So if I go to the transaction type, you will see something like whether it's an investment, whether it's investment with premium, borrowing, what kind of thing is this? So let's say I want to create an investment, and then the partner comes, right? So to see the partners, you can go to the basic table, and then you can basically give the group. So generally, the treasury partners will have group TR01 and TR02. So these are the business partners which have been created previously in standard SAP, right? So let's see if I just take this. So this is a T code BP. I'm just looking into this business partner called Citibank, New York. So as you can see here, we have something called counterparty, right? So this is already created by the standard SAP. But let's say if you have to do an implementation, your first job will be to get that list from your client. I think implementation is done for you, but in case you want to do a fresh implementation or a rollout for any company code, you have to ask these questions to your client, that how many such banks do you have with whom you are going to do these transactions, right? You need to there is a template in LTMC called MD92. Are you guys familiar with what is called LTMC?
Yes, Abhijit.
Okay. So LTMC, you guys know because you're maybe in finance or maybe for GL template, something like that, right? So similarly, we have got NB92 templates for S4HANA Treasury, through which you can fill the counterparties. Right? So you can download the LTMC template, you can fill up the different details, and once your business partners are loaded into the system, then you will have that list, right? Uh, you have to also give the company code details. I'm going to come to the company code details. So here, this is 17 company code, standard company code, and you will see something like payment details, right? you've got house bank and account ID. So yeah, I guess you guys are also familiar with the house bank concepts, right? So basically, this payment details tab is quite important in Treasury because this tells the system that, let's say, if I have to create a principal, or if I have to create an interest with this business partner, then what will be the bank into which the payment will be received? Like in our current project, everything is automated. When I say automated, what I meant to say is that, let's say if you have built an automation with your Wells Fargo bank for your external vendor payments, then you can use the same automation for your payment file for Treasury also. So what happens is, let's say if you have a loan with Wells Fargo, and if you have to pay your interest every quarter, then you can create the payment from Treasury, and the payment file will be automatically triggered, and whatever interest is due at the end of the quarter, that will get automatically paid into the bank instead of someone going to the bank portal and making a manual payment. That can be automated through the payment file. Whatever applies for vendor, same thing can be extended for this counterparty also. And when this automation will be triggered, how will the system know into which bank I have to make the payment? So this is where uh, make the payment from. So this is the house bank. So basically, let's say if I have to make payment to Wells Fargo, from which house bank I want to make the payment, right? So if I know that, it is always recommended to put that in the payment details, so that when the payment file will be triggered, system already knows from which house bank I have to get the payment and make to the Wells Fargo. Let's say I have a house bank in Bank of America where my own money is kept, and I want to pay to Wells Fargo after 3 months, whatever is my interest expense. So then this will be my Bank of America house bank. Bank of America house bank and its corresponding account details. We know about this F110, right? So this is something through which you can make now. Uh, Similarly, in Treasury, you have to, let's say, make interest. So let's say this. Let's take the same example. You have taken this loan from Wells Fargo, okay, which is, let's say, $5 million, and every quarter you're supposed to pay $8,000 as an interest payment, right? So what happens in F110? How do you control uh, from which bank the payment will happen? Can someone tell me? There is something called ranking order, and we control that. I give that, let's say, payment method is let's say E, let's say ACH. Then I'm mapping it to, let's say, certain Bank of America, Bank of America, and this is my, let's say, account ID. This is what we give in the ranking order and ABZP, right? And then based on the payment method that you select in F110, automatically this gets picked up, right? Now in Treasury, you have to do this configuration anyway. You have to do this configuration. Let's say in Treasury, generally we use payment methods X, Y, and Z. You have to do this configuration in every ZP. Apart from that, if you have to tell the system that for a specific counterparty, Wells Fargo, let's say I want to make the payment from, let's say, Citibank, example, Citibank and CIT01. So this is my house bank and account ID, or the account number, from which will make the payment to Wells Fargo every 3 months, every quarter, right? This is the house bank and account ID that I'll be providing here. Whatever I provide here for this particular counterparty, that will be the one that will be used in the deals also. This is a way to pick up the house bank account ID for an automated payment. So this is why payment details become very important. So this is nothing but let's say, the way you give a ID, right? Let's say if you go to your normal general data, if you go to payment transactions, This is just an ID for us, right? Euro 1, Euro USD 1. The same thing, just a ID. This is a currency, and I can basically give, let's say one is for, generally one is for payment and one is for receipt. So let's say I'm making, let's say one for payment, one for receipt for euro currency. You can say for dollar. Based on the currency which will make the loan or the investment, I can tell the system that this is going to be my payment bank, this is going to be my receipt bank. I can control it differently. Generally, I have not seen it to be different. It's always the same, but you have the control to keep it different based on your pay and receive, based on the ID. Then you've got authorizations. Yeah, it's better to authorize everything so that whatever you authorize here, only those products will be allowed. Security, foreign exchange, money market, derivative, trade finance. Again, you will find more details here, like if you can, not even go at a product level here. Then you have got all these things, planning groups, etc. If you want, you can give reconciliation account is important. Should always fill up the reconciliation account. Since it's a test system, probably they have not made it mandatory, but generally we need to fill this up. Whatever reconciliation account you want to fix for your group of the treasury business partners. Let's say if you want to group all the treasury business partners into a certain treasury grouping, right? You can give that reconciliation account. It will depend on your business partner groups. So generally for bank we give one treasury grouping, and we can have same reconciliation account map for that. The determination of GL account will be based on the business partner grouping. Okay. So let's say if you have vendor, you want to assign a reconciliation account based on your service vendors or your goods vendors or raw material vendors, like that, right? So this is similar to that. Let's say if you want to give a reconciliation account based on all your banks, you can have a certain treasury BP grouping, and you can assign a single reconciliation for all those BPs under that particular group. Generally, it's always a cash account, the asset account for the bank. So this is not exactly your main account. This is your asset account that will be mapped to the particular bank. So if you have to categorize in that way, it will be a main account. But generally, it is slightly different from your main account and clearing account, because that is for your house bank. Let's say if you have to assign a certain house bank, then that will come under a particular asset. So this is more like a counterparty, right? So let's say when it's a counterparty, you're going to create a liability, and then you're going to make that payment. So when I say, so let's say whenever you're going to, what will be the accounting entry? Let's say if you post TBB1 for a loan, then what happens is your liability account gets credited, and let's say your main bank, or let's say miscellaneous bank. So this liability account is something that we're talking about. This miscellaneous bank will get picked up from your normal bank. Let's say if you are making a payment from, let's say, this one, then this will become as a miscellaneous bank here. So it will depend on the kind of, so let's say if you do TBB1, then it will pick up like this, and this will get picked up from your business partner. Let's say if you do a vendor posting, right, then your vendor liability always gets picked up from your vendor master, right? We can, but the thing is, what I've seen, the treasury correspondence function is not so robust. You may be able to send some payment advice or some basic things, but most of the things, it is not like your AR correspondence. AR correspondence, the functionality is more robust. You can easily send certain things. You can develop it in custom, but in Treasury it is not so robust because we have rarely seen such needs to send correspondence. But yeah, we can enable. That will be slightly different. So generally, this correspondence are needed. Let's say if you made an interest payment to Wells Fargo, and you want to inform them that I have already made interest payment to you, and this is the advice that I'm going to give it to you. That is where the correspondence things will come. Yeah, you're talking about integration. So that happens through Bloomberg or FX trades. That is where, let's say, a lot of companies, even I have seen my experience, let's say I have a company which creates a lot of foreign exchange deals in Bloomberg. And then they're saying that I don't want to replicate the same thing again to my S4HANA. because that is a wastage of my time. I'm going to go to FTR create, I'm going to create the deal, I'm going to give the same information, same amount, same dates, everything. But I'm already creating that in Bloomberg. Then why do I need to replicate that again in SAP? Right? So that's in those cases there is something called FX. There's an integration aspect. You have to still build a program, but there are certain standard programs in Treasury where you can upload in a certain format those data for Bloomberg, and you can automatically create the deals. You still have to post them manually through TBV1, but the deal creation can be automated through a standard program. This program is very similar to a BDC program that you can develop based on certain fields or certain values in the fields, right? Like through Bloomberg or certain market data, you can see that you can download the things in a certain format, and even there is a way to integrate and send those information into our server. And then there's a standard program which can take that data and upload the deals automatically. There will be some aspects of development, but a lot of things are standardized in Treasury because that's a very common scenario that some client is using a third party to create certain deals, and they want to avoid doing the same thing in SAP again. Okay, so this is how it looks like. This is I'm creating an interest rate instrument, a fixed pump deposit, company code, the product type, transaction type, which is nothing but whether it's an investment or a borrowing, those kind of things. Then the partner we discussed in details. Then this is the flow type. These are the ones which are configured in the system. What flow type is configured based on the product type and transaction type. So let's say let's create something. Repayment method can be of different types. It can be final repayment. Here, nothing else is configured, but there can be also, repayment in an annual way, right? So it depends on the kind of repayment you want to do. I'm keeping the frequency at the end of the term, but you can also, make it something like monthly, right? Every 1 month. So basically, let's say if you want to enjoy your interest every month, you can do that. So basically, it's a configuration, right? Based on the flow type, transaction type, and all these things. These are all default things. This condition type is for the interest. That's why it is showing under the interest structure. This condition type is for your final repayment. You can give assignment, internal reference, all these things. So basically, generally these things are being used. Let's say if you want to track, let's say your legacy fixed deposit number, or you want to just keep a track of certain things. You can, let's say you want to keep a track of your cost objects. You can use these things. Here, you can give something, but I am not giving anything for now. But you can give something like withholding tax or charge or commission. Because let's say if you have a bank charge and you want to post it through Treasury module only, then you can use those kind of things here in the other flows. But it will be a manual activity. It will not be automated. Payment details picked up is USBK1 and USACH1. This is what I was showing you. That whatever you maintain here, that will get picked up. Here it's a dollar investment, right? That's why the dollar ones have come here. Cash flow. So this is the cash flow that has come up for you, where you have got a principal on 3rd of Jan. Then every month you have got an interest because I have kept it in monthly. If I just keep it at the end of the term, then the cash flow will change here. It is coming on only on the last day. But if you want to keep it monthly, you can do it based on whatever your client's requirements are. You can. Okay, so I'm saving this. Yeah, we cannot help because this is a test system and you can have some technical issues here. But generally, this is how you once you have to just save here, and then that's how things get created. So that is how you create a deal. I hope you got some idea now. So this is what is product type. These are the different products that we have. Yeah, these are again trade finance products. So trade finance is again, one step in advanced of treasury. LC, BGs, all these things. Yeah, so the cash flow is something that we can basically, as I was explaining here, there can be so many cash flows. There can be so many flow types which are we can configure even more. Here we have got some standard flow types like charge, bank charge, commission, withholding tax, taxes, all these things. But in real time scenario, your client may come up with many such flow types. They may say that we have got legal expenses, the documentation expenses, mortgage fees, upfront fees, and a lot of things like that. So let's say if you have got a loan or anything like that, often there will be certain bank charges, or there can be illegal fees in case of a stock. There can be an agent fees in case of a bond. There can be a facility fees, stamp duty. There can be even withholding tax. So if you want to post it through Treasury, it is always recommended to configure those things in other flow types instead of recommending the client to post it through journal entry, because then you can track it to the Treasury reports. That's the reason these flow types have been created or introduced. So based on whatever GL they provide, you can configure that in the account determination in Treasury based on your product type, transaction type, and flow type. A GL will get picked up. And let's say once you give this, so let's say I'm going to add charges here, and let's say I know it's an expense. I'm going to select outflow. Let's say I know that there'll be it's a $200 charge, and it's you have to give USD here. This is nothing but the currency. Then you've got the payment date. So let's say I know that I'm going to pay it on let's say on the last day. So whatever we choose here, if I now come to cash flow, yeah, this will start showing. F110. F111 is more used for the payment requests. So payment requests are slightly different. That is used, let's say, if you have to do a bank-to-bank transfer, which is more like a direct payment, or if you want to give this direct payment to a very small payment from an external vendor, you can create a payment request. Those are the things where we create a payment requests, where there is really no module linkage as such. You create a payment request, you book your entry, and then you create F111 to make payment for all your payment requests. And F110 is something that you use whenever you have a business partner or a counterparty. You can use F110. So here, what will happen here? Your interest, whenever you are booking this entry, let's say bank charges, it will first go to your interest expense debit, and your liability will get credited. When you say liability will be credited, I mean this business partner. So basically, you are charging your expense to this business partner first when you're going to run a transaction code called TBB1. The moment you run TBB1 for this deal, you will book an entry, interest expense, or bank charges expense debit to this business partner credit. Then when you do the F110, your business partner reconciliation account will get debited and your bank will get credited. And then you can obviously clear your miscellaneous bank and your main bank. Ideally, yes, it will depend on the design of your treasury or your configuration. But ideally, yes. Ideally, only counterparty role may not be used. You have to extend it to vendor or customer role also in order to use that particular counterparty in your payment runs. But that has to be decided in conjunction with the AP or AR team, because that is an overall design decision. Like in our project, we have extended to a customer role because of certain tax related entries. We had to take that decision. It's for both. It's for most of the things TB1 is used. Let's say whatever cash flow you're seeing here, be it principal. Okay. So there is some issue with this trace system, but overall, let's say, let me open the Excel sheet. Whatever entries get posted, let's say, be it principal, it can be slightly different, but most of the things will be through TBB1. Let's say if you're creating a forward contract also, your basic entry of your buy and sell legs will be posted through TBB1. But the only difference with a forward contract and a normal deal is that in forward contract, the realized gain loss part is posted to TPM 18. But basic entries will still get posted through TPB1. It can be an interest expense, it can be an interest income. It does not matter whether it's an outgoing or an incoming one. Whatever cash flow you're seeing in the deal, the basic cash flow will always get posted to TBV. Okay, so basically this one talks about the equity part. We have got, again, in equity there can be a subsidiary, a joint venture, an associate. Here you have to create your demat account details or the security account. You have to create investment class type or the security class ID. You have to record the trade details through the deal. You have to post the accounting flow, dividend, accrual, and payment. Then you have to post the transaction flow of the trades. Then the period and valuation will come, and finally you get all the reports. So this talks more on the equity side. Cash flow analyzer is, again, I have just given this here, but this should be more on the cash management side of the thing, where you basically can review your cash positions. You can create a manual record through memo records. Then you can again review the cash position, and then again cash flow analyzer is always linked to your bank, like bank accounts. How many accounts do you have? What are the main banks into which the entries are getting hit? Based on that, you can see your cash flow analyzer, and based on the liquidity status, management can decide whether to invest or borrow. So you see, basic data is like in cash flow analyzer is something which is slightly different from your cash forecast. In cash flow analyzer, all the data comes, even your normal purchase order, sales order, your invoice, everything comes. But the basic flow of cash management is that you have something called grouping, and in that grouping you can have different kind of structures, and each structure will have certain uh, GLs, right? And how will you basically give those GLs? That will depend on the grouping you want to, in the way you want to see the cash position, right? So let's say you can give all your certain bank GLs into a certain grouping, certain liability GLs into a certain grouping, certain receivable GLs into a certain grouping. That is how have the overall cash management structure. But in cash flow analyzer, how S4HANA has structured is that you can create right from your PO actual payment, and whatever based on your payment terms, etc., it will start showing the balance. That is how you can see the. We'll discuss cash flow analyzer in details when we discuss the cash and liquidity management. I'll also show you how it looks.
Sure. Yeah.
Just giving the basic things here so that we can get some picture, and then we'll discuss everything one by one when the exact topic comes. So I think we can discuss these things in the next class also, because these are all more advanced topics. So it's exposure management, market data integration. What I have done, instead of creating so many different presentations, I have created a single presentation, and we just covered the basics today, and we can cover the more advanced topics in the next class, and like we can go into things one by one. I have tried to cover a lot of things here in this one presentation. It's a lot of reversal process. It's a very complex process in SAP, but yeah, we'll discuss those things. Let me just quickly take the attendance now. I think I was supposed to take in the middle of the class, but so we have touched upon this part to a certain extent today. Like, whenever any accounting entry happens to TBB1, that is where the integration happens. Like, someone asked a question about how you're posting the other flows and how the GL is getting picked up. I'll show you the account determination configuration also. So this is where whatever you are doing in treasury, be it principal, be it interest, be it accrual, or be it other flows like withholding tax or charges, all these things have to be integrated with GL. And whenever you're doing TPB or F110, different postings will be happening at each stage, and that is the integration part. Then we have got some risk management sessions like market risk, credit risk, exposure management, these kind of things. This is quite important. As I was showing the balance sheet exposure screen. So basically the example that I gave previously, let's say if you have a foreign payment that they have to make a foreign payment to one of your Chinese vendors after 3 months, or TCS is going to get a US dollar payment from one of its clients after 3 months. So that is like a foreign exposure that I have. There can be something like balance sheet exposure also. Then we have got the reporting and analytics part, where I'm going to show you certain SAP Treasury reports. Like we created a deal today, we can post the deal. Then once accounting entry happens, how will you know if I have got 50 deals, how many deals have I actually posted, how many deals are still open, how will they know all those things? That is where the treasury reporting part will come. Then you have got the cash and liquidity management. So this is again, as I was explaining, the cash flow analyzer part. So they have also something called cash position, check cash flow items. So these are some of the cash position management things. And also we have got a lot of configurations related to this. I'm going to show you the configuration also, how the structure is created, how the grouping is made, what are the basic logics into which the grouping is made, how to basically understand your client requirements and group them accordingly. So these are some of the cash and liquidity management things we'll discuss. And so Renugopal, what are the things that is implemented for your client? Any brief? So there is a T code in MBC through which you can basically analyze your acknowledgement files, right? You have the integration complete with for all the payment files, etc. I'll tell you the process, the T codes, etc. Because even I have faced a lot of issues for past 2 years for MBC and BCM also. Yeah, MBC is something that you all have to learn and do because MBC
Exactly.
is 2020, right? That
Yes,
came
yes.
probably 3.5, 4 years back. We have to just tell the MBC team and they do the hard work for us. Yeah, bits can be configured from our side, but depending on your design, let's say if I understand you send information to, let's say if you're triggering a payment file, you send information to MBC, then MBC sends it to Swift or some third party, and then Swift sends it to the bank, right?
Correct.
So
Correct.
whatever is the bank BIC or message type, those things have to be configured in SAP server itself. So they can configure, I can show you the MBC configuration also. But you have dependency on MBC for the technical parameter configurations. So let's
Right.
say if you want to configure a certain Swift message type. If you go to the MBC module, you'll be able to the 5 or 6 parameters which have to be collected from the bank side. Those things have to be configured by the MBC team. So there are certain technical parameters which only MBC can configure instead of your basis team. Previously, you must be reaching to basis team to configure those things, right? If it's SAP PI or something. But right now, those things will be configured by the MBC team. That is the only difference. Yeah, so again, so cost is something that I am not exactly sure of because that is taken care by another team. For at least in the client side, there's a separate team which takes care of the costs. But yeah, we have a weekly call that we do attend to the MBC team, and we do reach out to them in case certain things, because there can be certain conflicts also, because when we have implemented S4HANA MBC, we could see that there are certain conflicts, especially if it is with certain countries like China or India, where there is restrictions of using Swift. Because right now, as you guys know, that there's a lot of restrictions on data, and most of the countries, especially Asian countries, are shying away from using Swift. They're more relying on the host-to-host connectivity, and that's where you have to share the IP addresses. You have to buy this IP address. We can do that. We can definitely. I was actually planning to show the system. I have not created any configuration document as such, but I can check if I have something that is more generic, which you can share with all of you guys. Let me just check in my database if I can find something and share something. At least if I can share for one product.
All right, let's test your knowledge. Here's a question for you. What is the primary purpose of integrating SAP Treasury with SAP Finance? Option A, to facilitate cash management and banking operations. Option B, to manage procurement processes. Option C, to handle asset acquisition and depreciation. Option D, to manage inventory. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck. Type the correct answer in the comment section. Hey there, wanna master SAP FSCM Treasury Integration with SAP Finance? Our course has got you covered. You can learn at your own pace on our platform. In this course, you will dive deep into SAP FSCM Treasury Integration. Think of it as a toolkit for managing money flow and finances efficiently. From the basics to advanced strategies, we cover it all. Our experts have crafted this course with years of experience. Your instructors are seasoned pros, ready to guide you through every step and clear any doubts. And guess what? Our students rave about this course. Folks just like you have found it incredibly beneficial. Plus, it's budget friendly. Learning this valuable skill won't cost you a fortune. Ready to ace SAP FSCM Treasury Integration? Enroll now. For more details, visit ZaranTech's website.
The presentation includes example images and references only for informational purpose. Complying with the applicable copyright laws is the responsibility of the user. Without limiting the rights under copyright, no part of this document will be reproduced, stored, or introduced or transmitted. And credits shall be given to the images taken from open source. It cannot be used for promotional activities. A brief introduction of Treasury. We spoke about the basic purpose of Treasury. I hope my presentation is visible, right? As I'm moving, we had discussed on the business partner concept about the counterparty roles. And we discussed why SAP Treasury module is used. What are the different benefits? Then we also discussed on the different components of Treasury, how it is mapped, in Treasury, cash, liquidity, FSCM, BPC, etc. Then we also spoke about, the overall structure and payment, bank communications. We also spoke about NBC, right? Like overall in-house cash pooling, cash forecasting, treasury risk management, workstation. So maybe we can quickly understand if there is any doubt, any questions from yesterday's sessions. Otherwise, we can today we can start with the month-end process flow. Yeah, this is where we want to start, the month-end process flow. Although we have discussed on this to a very brief extent yesterday, but we can discuss more in details about the month-end overall process flow. Unfortunately, whatever error we are facing yesterday while creating the deal, that error is still being looked after by the technical team, because they actually think they are from a different time zone, and they got to it, or they got to know about it sometime back, and they said that they'll be fixing it by tomorrow. So tomorrow, once they fix it, I can show you how to create the deal or settle the deal, etc. So, but obviously, we'll still cover a lot of things. We'll be touching upon the account determination configurations today. And first, I will cover the basic process flow, and also we'll discuss the accounting entries that gets posted during the maturity of the deal, also during the month-end process flows. And then, as we get comfortable with the accounting entries, we'll discuss on the account determination configuration and the integration with finance. So I will definitely cover the configurations today for the account determination. Okay. But before touching the configuration, I wanted to first cover the process flow so that you can understand what accounting entries get posted. Okay, let us start with the configuration then. So I have prepared a document. Let me show that. So basically, we discussed yesterday on something called product type, which is nothing but the types of products that you have, like foreign exchange, forward, spot. It can be a loan, it can be an investment, it can be fixed deposit, it can be equity or bond. So this is a product type. So that is the first step in the configuration. I'll show you in the system also, but that's the first step. Then comes the transaction type, which basically can be forward, it can be spot for FX, it can be investment or loan 100 or 200 for a particular product, and so on. The transaction type is linked to something called flow type. So here we have taken an example of foreign exchange. So that's why we'll see the flow types have got buy leg and sell leg associated with it. Then you have got something called update type. This is another SAP terminology which is linked to the flow type, which actually shows the transaction level postings. For example, if you have a buy leg, sell leg, it can have a realized gain and loss. So this update type will be assigned in the configuration to posting specifications. So as you can see here, this is one buy leg that is assigned to 11600 posting specs. Then this posting specs will be assigned to account symbol. I guess some of you are familiar with the electronic bank statement configurations, right? So even in electronic bank statement, we use something called account symbol and postings specifications. So this posting specs will be linked to account symbols, something like that, because update types will be linked to transactions and update types will be linked to posting specs. So update type will be the linkage between the transaction that you are posting. Let's say you're posting a realized gain loss. So a certain update type will be called and that will be linked to the posting specs. And posting symbol specs will be assigned to account symbols. Again, these account symbols, like the same posting specs, can be assigned to two account symbols based on the posting key, which is again something linked to your debit or credit, like 40 and 50. I think you guys are also familiar with posting key, right? Which is more of a GL terminology for debit or credit. And these account symbols will be assigned to the GLs. So this is how the GL will be mapped into your product type and transaction type. The way the user is posting the deal and the kind of transaction the user is posting, based on that, system will be able to understand and pick up the GL automatically in the account determination. This is the basic crux of it. Now, I have tried to give an example. So this is a deal that I have posted here for a particular company code, and this is a flow type that is getting picked up in the cash flow. So now, uh, basically, this is 60A. 60A is a product type for foreign exchange, and for transaction is 102. So this has got picked up, and then it is picking up the buy and sell leg based on what I am buying and what I am selling. Right. So here I am basically buying dollars and selling Australian dollars. Now this has got this linked to the update type FX 1000 plus corresponding to 1000 buy leg and FX 2000 minus corresponding to sell leg. And then again there can be FX gain or loss. So gain or loss will be understood with the system based on the exchange rate in which it is getting sold. So let's say uh, you are taking a forward. Let's just talk about Indian context. Okay, so in Indian context, let's say you are buying dollar and selling INR after 3 months, and you are taking that particular forward at the rate of 81, but the market rate has become 83 after 3 months. So basically, you are buying dollar at the rate of 81, and the market rate is now 83. So basically, you are buying at a cheaper rate than market. So that is the advantage of taking a forward, and in this case, you can have some gain. But in case the dollar falls and becomes 80, you can have a loss. So depending on the market rate and the forward fixed rate, you can have a gain or loss, which the system can calculate based on the current exchange rate. So I guess you guys know also about OB08, where we can maintain the system rate uh, through, it can be a Bloomberg M rate, it can be some other rates based on your country, right? So based on that, whatever you are maintaining, the system has the ability to calculate that rate and compare with your forward rate and automatically post the gain or loss. We'll come to the reporting part later. So, okay, now maybe you can go to the system also. But okay, before you go to the system, let me just show you how it looks like here. So let's say this is a foreign exchange. I'm just showing foreign exchange here. So here you have to go to the business assign flow type to update type. So here you can basically see how the flow types and update types are linked to each other. So now these update types will be assigned to the posting specs. So this is there in the account determination. I'll show you under the account determination sheet in this particular uh, part is there. Here you can see this linkage between update type and the posting specs. And this posting specs, yeah, this is, I've just given some more examples how it is linked. Okay, so now you got the posting specs. The posting specs is now assigned to the account symbol for different posting keys based on the document type. This is 11500 and this is 11600. Given some more examples. And this is how the account symbol looks like. The account symbol we have to define first, definition of account symbols, and then account symbols will be linked to the GLs. You can define your own account symbol also, but mostly you will see these are standard. You just have to change the GL. You will have to probably have a standard GL assigned from the company code that will copy. You have to just change the GL as per the GLs given by the client. We also have something called account assignment reference. Actually, this is another particular field which has been given to us to control the product types and transaction types. Let's say for same product type, you want to assign different GLs based on the transaction type, or you want to restrict certain things by company code, because most of the treasury configurations are non-company code specific. Let's say if you assign a particular GL for a product, that will be irrespective of whatever company code into which you're extending it into. But there can be certain controls. Let's say there can be a scenario. Let's say if you're working for an MNC, and let's say Thailand has a certain way of doing the exchange rate posting, which is slightly different from the other sites because they have certain regulations. So they may say that no, I cannot use this GL because my statutory requirement tells that I have to use it. Let's say GL based on the average buying rule of the exchange rate. So my DLA exchange loss should get posted to a different GL. If you have such specific scenarios where you want to control the GL based on the company code, then you can use something called account assignment reference, where you have restrictions by company code or transaction type or some other parameters, which is an added I would say parameter compared to EBS for treasury. So we can go to system, we can review the same thing in the system. So this is also very important company called additional data. Let me show you this. This will not have that much data probably. This is another step where you need to assign your company code, the chart of accounts, all these things need to be assigned here. So I was showing these product types to you. So here you can basically define different types of products that you have. 68 foreign exchange product category, non-deliverable forward, and so on. Transaction types, it will have number ranges, etc. The number range, as we know, it's a cutover activity for this particular transaction. We have this defined number range. So this 60A is assigned to 101, 102, 103, 104, 105. Based on the type of transaction you want to create for the same product, you can basically assign many such transaction types. This is how it looks like. This is the number range 19 assigned to this. So we discussed about the flow types. We can define the flow, like increase cash settlement. So cash settlement is something that we use when, let's say, if you have a forward deal, and sometimes it can happen that even for a forward deal, the company decides to treat it like a non-deliverable forward. So in this case, they can use a cash settlement option where instead of I paying you, so let's say what happens in a normal forward. In a normal forward, let's say I am selling you, 1 lakh dollar, and I am going to buy, let's say, uh, 81 lakh rupees from you. And on the after 3 months, on the forward day, let's say I find that the market rate is, let's say, 82, and I have to actually pay 82 lakh to the bank, and I'm supposed to receive $100,000 or $1 lakh. So basically, I have got two options. One, I receive the actual $100,000 from the bank, and I give them 82 lakh. Or if I have sufficient dollars in my company already, I can simply just take that loss of 1 lakh and simply just pay the bank 1 lakh rupees, because you do not need that dollar, because you may have already excess dollars in your books. So you can simply just convert that forward into a NDF using this cash settlement flow type, right? So this is where this cash settlement can become in handy. So similarly, you've got many such flow types: accrual, deferred, realized, gain, loss, etc., which are the common ones which are used. So this is the assignment which we have been discussing, how the product type, transaction type is linked to a certain flow type. We can, but generally I have not seen standard any deviation from standard, because SAP has given a lot of options for transaction type to be used. So there is really hardly any need to deviate from that. So see, you have to first, basically, when you're going to create the transaction type, you'll be creating the transaction type to a standard product, right? Or even the product type is new for you. Now, I'm just asking the scenario that you just gave. Let's say if your client is giving a scenario, you will be using a new transaction type under a assigned product type, right? Under a old product type.
Yeah. Still, I've not received this scenario, but just I'm thinking maybe we can get it. Let's say.
Yeah. So let's say if you want to
how
create a new transaction type under 60A, you just simply create new entries and give the same product type 60A, but this, instead of 107, you give 108, or it's up to 107, right? Yeah. Instead of 107, you give 108 or 109. Yes, you have to. That is why, see, you can copy. If you copy, at least you will have some, it's a little bit easy for you. You can probably name it as Z01 or something, so that you know it's a Z transaction type, and you can copy from a forward spot. But in general, I have not seen this, because generally, whatever scenarios you can think of in Treasury, most of the scenarios are already part of the standard. Generally, we need to do custom development in Treasury for certain scenarios which are, which are very specific. Like yesterday, we discussed one scenario from that you are having a lot of FX trades in another trading platform. So you want to basically just tweak the standard program to bring certain deals in an automated way, or you maybe you want to probably develop a new report, or maybe there can be cases where your exposure calculation is not matching, because in SAP there is a certain way in which the exposure calculation happens for your hedging, but often I have seen that that may not be sufficient. In those cases, it's fine. You can use a custom program, but standard product types and transaction types are 90% time sufficient. Because SAP is, when SAP is selling a product, or you are selling a product to your client, you will be selling based on whatever solutions you have, right? But SAP gives option to create a new product type or transaction type. Okay, so I was talking about this account assignment references. This is how it looks like. First step to define the product. There are a lot of standard account assignment references, and we generally use the standard ones based on the product that you are configuring. You can use. Once you create the account assignment references, you can use this to basically control the parameters of your account assignment references. So let's say, I give some example. So here you have got a constant. Here it's a constant value. You can go to condition here. Here you can, I select that you can control through transaction type or company code, right? So basically you have to define the company code here, transaction type here, valuation class here. And based on that, this particular account assignment difference will be defined. Then if you assign a particular GL to an account symbol and to an account assignment reference, you can control your transaction type or your product type or even company code restrictions to this. So this is the different parameters that you can use here. You have got company code also. Okay. And here, let's say I want to just restrict it by 1710 company code, for example. I can do that. Or I can also say that I want everything to be mapped to a certain GL except Thailand company code. So I can just use not equal to symbol and give my Thailand company code, because we have used this in one of my projects where the Thailand company code has a certain restrictions for realized gain loss posting. So you can control it like this. Okay, so I'll go back. Let me know if you have any questions. So the account assignment difference can be also used for your money market as well as your bonds and equities. So these are for the bonds and equities. Shareholders, subscriptions, investment in associate joint venture, non-affiliate company or equity shares, as well as for bond issuance. It can be long-term bond or short-term bond. So now I'll come to the so this is what I was showing in the document before we started. So we have got something called posting specifications, right? That you can define as the first step. You have also got account symbols here. You can use custom also, but as I mentioned, as I think Renu was also mentioning, right, that it should be standard ones, because you will see most of the things like unrealized write-up revenue, realized gain, most of the things already are provided here, so you can use them. These are the posting rules, and then this is where we basically link your update type with your posting specifications. Okay, so you can control this in case you want to create a new update type. You can use that new update type, and you can assign to one of the existing posting specifications. This is fine. These are the depending on the client, you'll have the local gap and the IFRS gap. So this again is the assignment for. So basically, you can control the posting based on the valuation area also. Let's say you want to post to separate GLs based on your local gap and IFRS. You can control that in this way. And this is the final step where your account symbol and your account assignment reference is assigned to your GLs. Account symbols we discussed, and account assignment reference also we discussed for the restrictions. You have to give how much euro you want to buy. Yeah. Go to okay. You have to give. No, I think the date. It's asking about the date in comma format or something. Okay, make it 1.1 or 1 comma 1. 1.9. No, the cash flow is. What is the company code that you have taken? Oh, which system? Okay, this is your system, is it? Okay. So is it the right is it the right company code where you are supposed to have any foreign exchange? Can you do one thing? Can you go to a T code? I'll tell you the T code. Go to TX06. Here give the product type as 60A and remove the company code. So there is no forward in your system. So I think the configuration is not there for you. Can you go to another company T code called slash in TPM 13? Click on OTC transaction. Yeah, you just give some product type or just execute. It's fine. Go to this deal. Okay, this is buy sell only, but the product. Okay, can you open FTR and credit and open this deal number 1? Give the company code.
Which is deal number here?
The transaction, the fourth column.
Okay.
Do you have any company code called NL20?
Yes.
Try to give NL20 and deal number 1. The third term. Okay, so the product type for you is 602, and NL20 is the company code. NL70 is a partner. Okay, so basically it is creating a forward with NL70. Yeah, just check that because I was expecting a business partner here. Can you go to BP /BP transaction code and see if NL70 is created as a BP? Generally, we create with the like a IC BP or something, right? Like IC and the company code. So in general, we do prefix the company code with IC. Okay, no problem. You can use this transaction and you can probably create something like this. Okay. So they have opened. That's fine. They have opened their client system, and it's a live system where there's a lot of configuration. We're just referring one existing transaction and trying to replicate that. No, I think just use the same product type that is already used. I can see some product type is already used, like 602 or something. Like they may have configured with another product type. So they would have done something like they would have copied the standard and they would have modified it, something like that they would have done. And that's why you are not getting the general dilution class configuration from the standard, but it is there for the one that is configured for you in your client specific data. So, but I hope you guys got some idea, right, on how this whole account determination or the integration with finance works. So, let me just share my. So, for foreign exchange, as you can see, we have checked the product type, then you check the transaction type, and then you check the flow type. Then you have to come to the update types here. and understand what flow types are assigned to which update types. Right? For example, in our case, we have assigned something like 1100 flow type, which is a principal increase flow type. So now your job is to find out. So my contract type here is flow type should be 1100. 1100. So once you come here, you will understand that based on the contract type and flow type, my update type is DE110000 plus. So this gives my update type. Once you know your update type, then you can use this to come to your account determination configuration. Come to the account determination configuration. Give your chart of accounts, and here you'll be able to see that what was D what DE something. I thought I copied it, but somehow I don't see this. So you will see this list of update types, right? Just go to position and give the update type that is assigned to that particular principal increase, and you will get your posting specs. And from there you can go to account symbol, and then you can go to your GL. So this is what you need to follow. Once you post a particular deal and you run the TPP1 or whatever transaction, based on the flow type in that transaction, you will see the update type, and based on the update type, it will pick up the posting specs. So this is a way to link the GL to your transaction. Okay, so but you can just try that out, but we can also just try it out in the class once we get access tomorrow. Okay, so coming to the process now, I think we have discussed the configuration to a certain extent. Now we can just go back to the process. So payment request, again, it will depend on the kind of transaction you are doing. So there are different types of payment request. One of the most commonly used payment request is bank-to-bank transfer, where let's say you want to send some money. Let's say if you're a company, you're an Indian company like Reliance, and if you have multiple house banks, let's say you have a house bank in HDFC and you have a house bank in SBI, and you want to send some money from your house bank HDFC to house bank SBI, right? And let's say both are integrated. So you can simply go to a Fury app called so there's a payment app for Fury app to, I think it can be different, it can be same, it will depend on the process, right? It will depend on the purpose for which you're creating the payment request. Is it a payment request for your vendor payment? Is it a payment request for your bank-to-bank transfer? For vendor, right? So for vendor, there will be a separate Fury app or separate transaction code, because payment requests are often those kind of transactions which do not have any reference. Like when you want to create a vendor payment, ideally you should follow a purchase order process, or you can even follow AB60 process or you directly create an invoice. But if you want to avoid all of that and you want to simply make the payment, if it's a very small payment to your vendor, you do not want to create any invoice or a purchase, you can simply create a payment request and make the payment. So that is a process you have to follow for a direct payment. For a generally for a small vendor, for a direct payment, we can use such payment request for a third-party transfer. There is a T code. There will be a T code or a Fury app where you have to configure your payment request to the clearing GLs, and you can directly create a payment request for your vendor payment, and then you can use either F111 or in the payment request app only. You can release the payment and it will automatically get released to your bank. So as I said, even in Treasury, there are different ways. Like it will depend on what purpose you're creating the payment request. We'll discuss
Similar to
example.
in case.
Yeah. Previously in ECC there was a T code called repetitive code. Yeah. So that is again. So that will also depend on your design, because like in one of my clients we have designed it in such a way that even for normal let's say interest expense payment, we used to have a payment request created and we used to pay it through F111. But you can also create a business partner in any customer vendor role, and you can do a normal F110 payment. So it will depend on your design whether you want to create payment requests for Treasury or not. It is just a the way you use F110 process to pay your vendor or customer in Treasury, one of the most common ways to make payment is payment request, and then you
Yes.
do a mass payment through F111. But it will depend on the exact payment that you want to do, what process you're following. It will, based on that, you have to create a payment request. We'll discuss. So as part of month-end processing, treasury transactions are categorized as foreign currency transaction and local currency transaction. Obvious, it will depend on the currency. Based on the type of transactions, foreign currency transactions T code TPM1 will be used to post foreign currency unrealized gain or loss. So basically, let's say if you are an Indian company and if you are creating a loan in INR, there is really no need for any valuation because your liability will stay in INR for a long time. But there can be cases where you're an Indian company, let's say Reliance, but you are taking a dollar loan because the interest is in your favor. So let's say if you have taken a loan of $100,000 for next 5 years, say if it's a long-term loan, then you also have to do the valuation of the liability, as a month-end process or as a quarter-end process. Typically, it is done at a month end where you basically value your liability and you post the unrealized gain loss on the last day of the month, and then you reverse on the next day of the month. The way we use FAGL underscore FCB transaction code in GL, the similar process is followed in Treasury through TPM1. And for loan and deposit transaction, there is another code called TPM44, which will be used to record the actual or deferral of income and expenses. Like we have been discussing about the interest income and interest expense, which is posted every quarterly. Let's say you have interest income every quarterly from a fixed deposit, and you want to record the accrual. You can use a T code called TPM44 to record that. For long-term loans and deposits, there is another T code called TPM15, which is used to reclassify between non-current and current portion. So let's say if you have a long-term loan, that long-term loan, uh, that long-term loan is actually a non-current liability or asset for you, right? Based on loan or investment, but you want to reclassify it as at the end of the year as a current portion because of your balance sheet requirements. So this is a way in which a standard T code TPM15M can reclassify that portion based on the date. You have to give a certain date on which to do the reclassification, and based on that date, system has the ability to automatically calculate and post the current portion. So this one we discussed money market, foreign exchange, and trade finance. Money market for investments and foreign exchange for mitigating the foreign exchange risks. And trade finance is more for the LC or BG, which is more linked to your purchase or sale, which act as a guarantee for you in case you have a lot of export and import. So this is fine. I'm not discussing it in more details. I hope you guys know what is facility, right? Can anyone tell me what is a facility? So, okay, let me explain. It's actually quite simple. So first, let me just read it through. Facilities are agreements between a lender and a borrower, which control the general conditions of a series of drawings against a credit line. The lender can give drawing authorization to several BPs, product types or company codes, which are entitled to draw varying amounts at any time up to the total approved credit line. There will be product category under which all the different IV. So this is just forget about this IV. This is one of my clients. Different loan and trade finance facility will be managed. So basically, what it means is that so what happens is, let's say you are a MNC company. Let's say you're a company like TCS, which is really big, distributed across multiple countries. And let's say TCS India is having certain loan with Citibank, TCS US is having certain loan, and TCS, let's say London, is having certain loan with Citibank. So same Citibank has made certain agreements with different Indian or different country TCS, right? And in this case, the bank does not really have any control that TCS is not over borrowing from it. So to control how much drawing I can give to a certain company, generally banks will give a facility, and this facility will have certain utilization limit. Let's say I am giving a limit of 100 crores to TCS overall, TCS global, and it should not cross that limit within a certain timeline. Let's say within next 2 years. Within that time, within that particular credit limit, the company has company has allowance to draw any kind of loan. So this is where SAP has given a product type. These product types generally start with 56, like 56A, B, C, D, depending on what kind of facility you are taking. It can even be an intercompany facility. Let's say TCS India is really very rich and it has a lot of cash flow. But other TCS which are taking intercompany loan from TCS India may not be that much cash rich. So other companies, so TCS India is also restricting that I can only give TCS London a facility till, let's say, 20 crore. So this is how even an intercompany loan can have certain restrictions. So it's very difficult to control for the Treasury Department, let's say at a manager level, because TCS India may have 50 locations, right, in different cities. So it is very difficult for TCS Indian controller to control at a city level or at a state level that you don't take a loan more than this from this bank or from this intercompany. It is very difficult to do such controls. So there is a way to do that in SAP, where if you make your loan or investment mandatory with a facility number, so you cannot create your loan or investment in SAP without the facility number. Let's say make that field mandatory. Now, when you put that facility number in your loan or investment, that facility number will have a certain drawing credit limit, right? So now if that particular loan, I have already taken, let's say, 15 loans. Different states have taken different loans from TCS London, let's say, and now it is very close to the limit of 20 crore. So now it will start giving warning that it has got close to this limit, and once this limit is getting crossed, then you cannot draw any further loan. So this is a way. If I link a facility with a loan or investment, then I can control how much total drawing I can do within a bank or within a related party or intercompany. So that is the concept of facility. It is very close to that, but trade limit is for customers, and this is more for your internal control. So generally, what happens is in facility you have a certain limit that you put for a certain date and a currency, and then there is a rule in the facility. In that rule, you can give different company codes. So let's say I want to restrict all my Indian company codes with certain facility. I can put that, but the limit will be a certain limit for a certain timeline and certain currency. All the company codes cannot cross that limit. Yeah, I have the facility, or sorry, I have the feature to create a separate facility for a separate company code. That facility I have, but SAP has designed it in such a way that you can only put certain company codes in the rules. Whoever is the investor, it is always his call. If it's intercompany investor, it's his call. If it is bank, it is his call. It is hardly. It is not with the person who is doing the burden. It is always with the investor who is doing it. See, this is the rules category I was telling you. It has rules by company code. The company codes will come here. It has got rules by business partner. It has got rules by transaction type and transaction currency. This is how you can control how I'm going to use my facility. It will have a main company code. Let's say 79 is a main company code. Let's say TCS Mumbai is the main company code, but it can put all the other company codes, the sister company codes of TCS. Let's say TCS Bangalore, TCS Kolkata, etc. here to control it. And generally, facilities do not have any accounting entry unless you just want to charge your bank charge, just put your bank charge, etc. The facility number is mainly used to control in your loan or investment deals. That is how it is majorly being used. So foreign exchange are transactions which are used to mitigate foreign exchange risks. This can be either a spot or forward transaction. With spot transactions, international traded currencies are bought and sold for other currencies at the spot rate. And forward transactions, on the other hand, are traded at a certain date in the future, with relevant premiums and discounts for calculating the forward rate being specified. And foreign exchange swaps are used when you create a foreign exchange swap. The system creates a spot transaction and forward transaction at the same time. The foreign exchange bought at the spot rate is sold again at the forward rate, and foreign exchange sold at the spot rate is bought back again at the forward rate. This is also something that we can use, where you are basically, it's more of a speculative activity, where let's say if you think that you have made a mistake by creating a forward of let's say $81 after 3 months, and someone has another forward and you want to basically exchange it with that person, you can simply do a speculative activity with doing a swap. Trade finance is something we discussed. That basically, it is used more in conjunction with your purchase or sales. We have something like letter of credits. These are standard trade finance instruments for import and export transactions. It can be normal, standby, received or issued. And you can also have bank or corporate guarantees, which are used for your export import. Like more of, again, this will majorly not have any accounting entry as such. This will be used more for your as a way to release your sales or purchase. And one more interesting thing that I have seen in my experience is that generally, if you have credit management activated in your client, you will often see that credit management will not take this trade finance into account. That means if you have credit management activated in your system, it will not consider those sales or purchase orders, maybe more from the sales order point of view, those sales orders which are linked to the LC. Because in general, whichever sales orders are linked to LC and whichever are released to the LC, that is considered as a guaranteed payment from the bank. So the customers which are able to provide a LC with their sales, those customer credit limit do not get impacted for those particular orders. So this is the process flow. We can try to do this the system tomorrow once we get access. We have just tried to show it with fixed deposit. So the first step is to create fixed deposit through ftr_create, and then you can settle it through ftr_edit. Then you can post the principal to accounting through TBB1. Then we just saw a transaction code TPM15M to reclassify the valuation class from non-current to current, like from long term to short term or something you can say for your balance sheet requirement. Then you can post actual or deferral. You in step 5 here, actual or deferral. Then step 6, in case it's a foreign currency loan or investment, you can do the foreign currency valuation posting through period end. Then point 7, you can post the interest and final repayment to the accounting. So let's say if your deal is getting matured, you can do a final repayment. Again, final repayment, as I mentioned, can be either at the end of the deal, or it can even be like an EMI where you are paying your final repayment as an annual basis. Okay. Now let's say in treasury for reversal, if you have to, since you guys are working in support, you may get a lot of issues from your clients that I need to reverse this deal or I need to reverse this. It is always done in the same fashion in which you have posted. You have to follow the same fashion. Well, like you have to start from the last. So we have done the interest and final repayment in the last step. So you have to first reverse interest and final repayment flow and interest rate adjustment. So interest rate adjustment actually is another very interesting concept. Are you guys familiar with this interest rate adjustment concept? So what happens is, let's say if you have a US loan, and if we have taken that US loan in LIBOR rate, then in SAP what happens, you also have to do another uh, step called fixing of the interest. Because let's say your LIBOR rate is being given by the US government every quarter. Okay, so you get to know it, let's say every March, then July, and so on, every quarter. Once you know the rate in SAP, unless you fix that rate, the system will not let you post the interest. So there is a way to automatically fix it. There is also a way to manually fix it. There's a there's a T code called TI10 where you can manually fix it, and there is another T code, I think TJ05 or something. I have to check, which is a automatic way of fixing it. Depending on your market risk analyzer or your Bloomberg integration that you've implemented for market data management, it can happen that the interest rates are coming from Bloomberg or some third party like Thomson Reuters, and it is getting fixed in your system. Now, that fixing of interest has to also apply to all the deals which are using this particular floating rate. Unless you do that, either through if it is an automatic job that is doing it, then it is fine. But in case, like in our client, we have certain reference interest rates which are very country specific. Like we have certain interest rates for Brazil, which are very difficult to get from the government because governments publish the rates on a daily basis because the Brazil rate is really very high. So in those cases, you cannot automate it through a job. So you have to always make sure that you're performing the fixing of the interest rate first, and it shows in the interest rate adjustment screen also. If I use a variable, I don't know if I have variable rate here or not. Let me see. So let's say I make it as a variable. So there you will see a lot of options. You will see LIBOR USD 01, LIBOR USD 03, like that. So this is the US LIBOR rate. Similarly, you can have SOFR rate. The SOFR rate is used in Indonesia. Then you have also Eurobond rate. Okay, Eurobond rate will come when you have got euro in the euro currency. Since we have taken as dollar, we have taken dollar here. That's why we are seeing the not seeing the euro IBOR rate. We have got some London rates also that may come. So once you see this, once you use this, you will see something like interest rate adjustment. So now if I come to interest rate adjustment, you will see that this is locked, right? So then you have to go to this kind of things like TI10. So this is another transaction code called TI10, where you can give the deal number and you have to give the reference interest rate. So once the deal number is created, you will get a deal number here, and you can give this a reference interest rate here, and you can click on enter and fix the rate. I can show this to you once the rate is fixed for us. Let me see if this one works or not, because maybe this one will work. Let me make the frequency as monthly. So this is nothing but the way the interest will be calculated for you. And again, I was telling the repayment structure can be final repayment, it can be a annuity repayment or installment repayment. I'm just keeping final repayment. Okay, so this is how it is showing. So here, see, the interest is not calculated here, right? Because I do not have any interest rate adjustment here at all. The system does not even know what is this. That's why it is keeping as 0. Whereas if I keep it as fixed, if I keep it fixed like this, and if I keep it fixed, and if I give, let's say 6%, then it will come. So it is coming up. If in fact you can double click and see the calculation here, you will see that this is the payment date after 1 month. I am creating the deal on 5th of Jan. So the payment date is on next month, 5th of Feb. This is the payment amount. This is a calculation from and to date for 1 month, including the first day. This is the calculation method. The number of days is 31 because I have taken the calculation method as actual by 360. ACD by 360 means actual principal amount by the 360 number of days, considering the number of days in a year is 360. And percentage is 6, base amount is 100,000. So it's a simple calculation and it has come up as 5166.67. But the moment I make this interest rate adjustment as variable, system has no idea. So that is where your market risk analyzer, your market data management comes into the picture, because your SAP calculations will happen based on the market data, right? So that also creates certain risks for you, because let's say if you have done an investment and if you're expecting a monthly income of $5,000, suddenly if the Fed has changed the interest from, let's say, 5 to 3, your interest income will decrease, and that will also impact your cash flow. So now let's say you have planned certain vendor payments or your employee payments, depending on this interest rate. Let's say you're expecting interest income of $5,000, and you have similarly have many such cash flows, and you're expecting a certain income. But now, because the market rate has changed automatically, your interest income will fall. So these are certain risks. That is where this risk analyzers actually come very handy, which can help you to do certain forecasts. Right now, we do not use these tools that much because we have a lot of predictive analytics that have come up in S4HANA. But previously in Treasury, we used to have this kind of tools also. Anyway, coming to the interest rate adjustment part. So here you will see it is locked and cash flow is showing as 0. So now I'm going to save this. Okay, so there is also a way to reverse its interest rate adjustment. So here you will see there is a way to reverse. So let's say if you have fixed the interest rate, it will not let you reverse the flow. So then you have to come to this TI10 interest rate adjustment and click on the reverse here, reverse button here. You have to first reverse the interest rate adjustment. Then you can reverse your final repayment and your interest. So that is where you should do this in SAP. So reverse interest, final repayment flow, and interest rate adjustment, step 8. Then step 9, reverse the posting of final repayment and interest. Okay. Step 10, reverse the reclassification from non-current to current. So this is what you have done here. Now you're doing this. Then reverse the key date valuation. So now you're reversing the valuation part. Then reverse accrual and deferral, and finally reverse the deal. So reverse deal is something that you only do as a last resort. First, you always try to adjust the accounting entry. Generally, there is a T code called TPM10, which is very useful in reversing different entries in Treasury. Then you can mark the posts for reversal also. Okay, so this is the overall process flow that you should follow in Treasury, and it can come handy for you because in support projects I have often seen a lot of requests in terms of reversal, your deals or your accounting entry is not correct, so you may get such requests, and this can be helpful. Okay, so I think then comes the market data management. So now I'll try to go to another document that I have got this document. So basically, just to let you know, guys, I have this is one of my old documents that I prepared long back, and I just wanted to show this document to you. So this is something that I have prepared as a rough configuration document. Obviously, we had a specific configuration document format for the client that I have prepared in more formal way. But I have taken some screenshots, and I just thought I will show you how to do the configurations. Because yesterday, I think Renu, you were asking to also give some more details on the configuration, right? We discussed on the
Right.
account determination part. So, but I thought I will give some more configuration steps which can be helpful. So let us
Yes.
try to go through this. Basically, one of the most important steps for configuration is to first understand the BP grouping and the BP number range. Obviously, this is discussed in conjunction with the AP team, AR team, etc. And the number range is decided, in overall fashion how you're doing it. So in one of my earlier projects, we have decided this to number range for us. Right. So then basically this is a grouping, the treasury grouping that we can assign to the number ranges. So let's say Y001 we have chosen for the capital markets partner, and then Y002 for the legal entity business partner. We can have some more business partner groups. So basically, if you, in case you have, let's say, trustee or certain standalone pay, you can use certain more groupings also. It will depend on the way your client you basically like to group their business partners. Then I was showing the product type. So this is another product type called 53B that we have configured. Then this is a commercial paper configuration. Commercial paper is nothing but it's more like a short-term deposit investment. So here we have configured 100 as purchase and 200 as sell. So these are the two things that we have configured. Then as I was showing, the transaction type can be assigned to the number range. So here we have given this number ranges, configured this number ranges. Then a similar flow type assignment to transaction type, we have done that. Then this is the flow type and the transaction type and product type assignment. Then we have got update type that we can create and then assign the update type to flow type and usage. So this is what we have done here. Like what kind of like, for example, I think Omar, you had a question on the transaction, right? How the transaction is linked to the update type. So this is where you can basically link your transaction to the update type. Then we can also link the condition type with the transaction type. This is where we are doing this condition type. Then again, this is something like accounting code. So this is a basic accounting code that we have to define, which is at a company code level. Then valuation area, we also discussed on the valuation area. Like often you will see IFRS and the local GAAP, two valuation areas for each company code. You have to define the valuation areas. Then we can basically assign the exchange rate type to the valuation. Where, as I was telling, you can have M, which is Bloomberg exchange rate type, or you can have R rate types, which are regulatory rate types. And there can be many such statutory rate types, like for Indonesia, we have some tax rate types, etc. Like in India, we have got RBI rate types, and so on. So depending on your company code and your country, you can decide on the exchange rate type and you can assign it here. So you can, this is another setting which is more aligned with the GL, where you can also assign the accounting principle. You can get this accounting principle from your GL team and you can assign this to the company code settings. So this is the valuation area. Valuation area, as I mentioned, it can be local GAAP or IFRS GAAP that you are assigning to the accounting code. So then there's something called position management configuration, which is also very interesting. Like we have been getting some valuation class error, right? I think when Omar was trying to create the forwards or the spot in the system. So that must be because the valuation classes is not properly defined in the system. So we can basically divide the valuation class into different categories. It can be short term, it can be mid term, long term. It can be even a cash equivalent. Like since this is for commercial paper, which is a very short term investment, that is why you've used this valuation class 5 as a for commercial paper. So then you can assign the valuation class to the valuation area. And finally, you can assign like this: valuation area, general valuation class, and valuation class. There are these 3 steps you have to perform in the position management. So then there's another step called update type assignment with your position change categories. So what happens is at a certain time you want to update whether it's a positive or a negative position change for your update type. So for this will be useful, this update type assignment. Now this is another part called position management procedure. So this position management procedure has to be assigned to the specific product type and the valuation area and the company code. This is what we have assigned here. Once you define the position management procedure, this has to be assigned. Then these things we have discussed, company code additional data is an important part. You can also define traders here. So basically, if I show you in the system, in the structure tab, you have something called traders. So some clients may want these traders. This is not a very general, not a very common requirement. Only some clients will want traders to be also defined, and you can actually name this trader like Jennifer, Peter, whatever they want their names, their users name they want. You can configure them here in this. Like we have got Judy, Amanda, Landy, Shill. These are the traders you can define. So field selection is also another interesting thing. Basically, this field selection is like this, where you can basically control. Like you guys must be familiar with the field status group concept in GL, right? Or in BP Master,
Yeah.
to control the. Yeah. So this is very similar to that. In case you want to, keep certain things optional, or you want to keep certain things mandatory. Like some clients may come and tell you that I want to keep my characteristics mandatory because I want to make sure that I always fill up my profit center for a particular deal, right? So you can basically control that through here. You can make that particular field as required entry. So you have got a height required optional display and not specified. Generally, we keep the standard settings only, unless any client has come up with certain specific requirements here. So this is for the field status group. Again, once the field status group is defined, you can assign the product types to the field status group. You can also assign calendars. This can be useful in certain cases. Let's say when you create a product, you have the, so let's say I have the option to, let's say, give on last day of the month, or manual input. In this cases, the calendars come in handy. Like let's say if I want to know which day is a holiday, I can use that calendar, and based on that, the system will maybe skip that day for interest calculation, or may not keep the payment date on that day. That is why it's always recommended to use calendar of the country for which you are configuring. So then these specific things can come in handy for your forward exchange, where you have to define the leading and the following currency. Rounding rule is very similar to FI. It can be round up or round down in case there's any calculation how you want to do that. Yeah, this is we have already discussed in evaluation class. We have also discussed in the account assignment difference part, how it can be used to restrict the company code or by product types. Yeah, we discussed all this. Since derivation rule, you can discuss a derivation rule where you can add company code or valuation area or product type, etc. for restrictions. Yeah, this is maintain rule values. If you want to, give all these things: valuation area, valuation class, product type, company code, you can do it at a mass level through the maintain rule values in the account assignment reference. Okay, there's also a cost center configuration in Treasury, where let's say if you want to assign a certain cost center for your interest expenses, etc. If you want to give certain cost center automatically assigned for your certain expenses or incomes, you can do that through Treasury also. Yeah. So this is the addition. This is the path. Allocate additional account assignment to account assignment references for your cost center assignment. Update types we have discussed, how update types are assigned. Numbering we discussed. And then the account determination part also we discussed. So this is the table which is being used, where you can basically see at one shot which GL is used at what account assignment reference. And again, account symbols we have discussed. We discussed the posting specification, which can be assigned to different account symbols based on the posting key. We have discussed all those things. And update type, assignment to posting specification we have discussed. Valuation area, we have discussed how update types can be restricted by valuation area. We've discussed that. And finally, the main configuration of the account symbol with the GL. This is very similar to EBS, so you can do a masking of this GL, giving ++++01. Then it will pick up from your FI12 settings for the main bank and so on. See, I've done some masking here for the bank clearing. So basically, it will pick up the main bank GL and it will append 9 instead of 0, and it will bring up the thing. So I just wanted to run through a detailed configuration document for one of the product called commercial paper. I hope you also got some more idea on the configurations. So generally, it always starts with the product type, transaction type, and then we can assign the company codes to the additional company code data as I showed. So basically, if you have to use a certain product type with a certain company code, then the relation is with the accounting code. You have to define the accounting code, and you have to assign the accounting code in the company code, and you also have to define the additional company code data. Once you do that, you can use that company code for your product type. That is a linkage how it gets created with the product type. That is most likely the reason they would only want certain company codes to do treasury transactions. Otherwise, in general, what I've seen for big MNCs, they do not have any such restriction by company codes. They design it in such a way that most of the product types can be assigned to all the company codes. It is up to the users whether they want to use it or not. Because let's say today, like if you do a big implementation, and if you do not want to restrict your users from creating a fixed deposit or creating a loan, right? They may not use it. That is up to their discretion. But you want to design it in such a way that it is very much, it can be easily extended for any other company code. Because today, let's say big client like Unilever may have 100 company codes, but tomorrow they may have 150. They may acquire some other smaller companies, etc. So your design should be in such a way that it does not restrict my company code. And that is why Treasury is implemented in a very lean way. But the linkage is at only 2 or 3 nodes. That's all. All the GL, all the GL references, etc., should always be respective of the company code. And whenever you're copying a new company code, automatically those 2 or 3 nodes will automatically get copied for you. So you don't have to do anything specific for Treasury. If you have to implement a new company code, by default, whenever you're copying the company code settings, your Treasury will by default stay activated for that company code. That is how the design should be done in general. But again, from client to client, I don't know why it is restricted for you. Maybe they just want to implement for a few company codes and not for the others. They may not have need. That may be the case. But in general, that is how we should always follow for a design. So let's say for your company, since they're already using certain products like forwards, etc., in case they want to implement SAP for another 2 company codes, then the questions should be whether you want to extend your existing products to these new company codes or not. In case they want to extend, whatever company codes are linked with accounting codes or the additional company code data, you can simply use those settings and copy for these new company codes. Yeah, because treasury settings are mostly not at company code level, right? We are chart of account.
Right.
So as long as you copy a company code which is using treasury already, whatever 2 or 3 nodes which has company code settings, that will get copied for your new company. You just have to go and check whether it has got copied or not. And once it is done, you just have to do the cutover activities. Because certain things like account assignment difference, etc., are not configurable. They are cutover activities in treasury.
Hey there! Want to master SAP FSCM Treasury Integration with SAP Finance? Our course has got you covered. You can learn at your own pace on our platform. In this course, you will dive deep into SAP FSCM Treasury Integration. Think of it as a toolkit for managing money flow and finances efficiently. From the basics to advanced strategies, We cover it all. Our experts have crafted this course with years of experience. Your instructors are seasoned pros, ready to guide you through every step and clear any doubts. And guess what? Our students rave about this course. Folks just like you have found it incredibly beneficial. Plus, it's budget friendly. Learning this valuable skill won't cost you a fortune. Ready to ace SAP FSCM Treasury Integration? Enroll now. For more details, visit ZaranTech's website.
So let me start with a standard disclaimer. The presentation, including examples, images, and references, are provided for informational purpose. Complying with all applicable copyright laws is the responsibility of the user. Without limiting the rights under copyright, no part of this document may be reproduced, stored, or introduced into the retrieval system or transmitted in any form or by any means. Credit shall be given to the images taken from the open source and cannot be used for any promotional activities. Okay, so we can probably just have a quick recap of the things we have discussed in yesterday's session. So we have first discussed the introduction part, and then yesterday, today our topic is market data integration, but yesterday we have discussed on the account determination and the integration with finance. We have discussed in details on the configuration nodes, on the linkage between a flow type, update type, transaction type, product type, and the GLs through posting specs and account symbols. And we have also discussed on various scenarios like interest rate adjustment, etc. And we can probably start the market data integration part in more details. So let us start with the market data integration, which is today's topic. So basically, if you remember, yesterday we discussed about certain reference interest rates that is needed for different kind of investments or even fixed deposits, right? So if I show you the slide, this slide, yeah, if I show you this slide first. So basically, if you see here, this is a fixed deposit with a variable rate. So as we discussed yesterday, we can have certain reference interest rates, which are like floating rates, depending on the market. So in those cases, instead of using interest category as fixed, we choose as variable, and then give the reference interest rate. And then we also give a margin. So basically, let's say if you are taking this fixed deposit from Bank of America, then for this investment, the Bank of America may give you a certain margin of 1%, which means if the US LIBOR rate is 4%, then Bank of America will give you one more extra percentage, and you will get a 5% as your reference interest rate. So this is called margin. Here, this reference interest rate is something that we get from the third-party sources like Thomson Reuters, Bloomberg, etc. Similarly, we have something called exchange rate. There can be certain market exchange rates that we configure in OBZ08, and there is a way to get those exchange rates also from the market data. So now this is something that I guess you guys know. You have to enter this ft_create in the command bar, press enter, create the deal, and then once it is created, then in the structure type you can see this. So now if I, with this understanding, so we also discussed about this interest rate adjustment tab yesterday, where we could see that, the first screen is locked and the next two are unlocked. So basically it means that I have fixed for the next 2 months and I have not yet fixed for the first month. So this is how it will look like. So we can just go to ft_create and in the interest rate adjustment tab, we can basically do this thing. Now, the question is, how do you basically integrate with the market, right? That is the question. So we'll discuss on the configurations and all the processes, but overall, this is how the process looks like. So we can have third parties like Bloomberg, which has capability to collect data from various sources of central banks and financial institutions. We have got different institutions across the world, like in US, you have got Fed, we have got London Central Bank, we have got RBA in India. So all these central banks basically decide on the interest rates of the world, and different countries follow different interest rates for that particular country. And Bloomberg or different third parties like Thomson Reuters has capability to source this interest rates based on something called tickers. So your job as a consultant, in case you are going for an implementation and you have been asked to do market data integration, will be to collect these tickers from Bloomberg. So generally, when I have worked with Bloomberg, I used to have a team. You will have someone from the Bloomberg sales team who will be a point of contact, and you will be given credentials of Bloomberg, and you will have access to create tickets with Bloomberg. So let's say your client in Thailand is telling that, I cannot use a LIBOR rate or a EUBOR rate, because for me I need to use a SOFR rates, or I need to use a MLR rates. So this kind of rates is something you need to get the tickets from Bloomberg by creating a ticket. And then you also need to understand the frequency, etc., by discussing with your client. So let's say if it's an implementation, then you can have a call with them. You can get the list of tickers based on all your sources. Like, for example, if you have got 6 countries for which you're implementing, and those 6 countries will have 6 different sources, then you get that list of central bank and the link from the client, and then you share those links at one shot with the Bloomberg team, and they will give you all the tickers. But if it's a support project, and if suddenly some client is telling that I used to have LIBOR rate, but now the statutory requirement has changed and I have to use MLR rate. So in that case, you have not implemented this MLR market rate in your system, right? If you have to automate it, then you have to raise a ticket to understand the tickers from Bloomberg. See, the thing is, in SAP, there is a way to configure the tickers and get the rates from central banks. And if the Bloomberg has already given those tickers to you, and if Bloomberg service is active for you, then you already have those tickers configured in your system. You just need to switch back from that old rate interference interest rate to from the new one to the old one. So you can simply just start using it. Like, for example, let's say you are implementing for a country. Let's say you're implementing for Indonesia. Now for Indonesia, you have got 5 company codes. You've already implemented 3 company codes, and you'll be implementing 2 company codes in next phase. And the 3 company codes are already using certain reference interest rates, let's say SOFR rates, certain exchange rates, which are, let's say, Indonesia tax rates. So you already have those tickers configured. You just have to extend those same thing into the new company codes. But if it's a fresh implementation in Indonesia and you have never implemented anything in that country, then there's a high likelihood that you may have to get those stickers, be it for rates or be it for interest rates, from Bloomberg, and you have to implement that. So it will depend on scenario. If it is for same country and you have already configured certain things, you can extend. But if it is a new country and you have not used that rate ever, or if something has changed in that country, that legal regulation has changed, or the country is probably finding that some central bank is giving a better rates and they want to implement some rate that was not done previously. So in that case, you may have to raise ticket. It will depend whether you have implemented that in your system previously or not. So depending on that, you have to take the action. If it is exchange rate, then it will get stored in OB08. Interest rates, there is separate T code, TJ05, and there are some other T codes where it gets stored. Very similar to OB08. There is either you can automate it or do it manually. The same way exchange rate gets automated, you can also automate the interest rate. The transaction code will be different, but the concept is very similar. So tickers, so basically tickers is like, it's like a symbol. Like for example, let's say if you want to convert USD to AUD, then this will have a certain ticker, let's say USD AUD. Right? It's basically a symbol which denotes a unique combination of certain letters and certain currencies in a particular way. For example, let's say if you ever use stock market, right? If you do buy stocks sometime, you will see that if you go to Zero's account, you will have a certain ticker for HDFC Bank or a certain ticker for Reliance. So what exactly the ticker means? It means basically a symbol which denotes that this particular uh, ticker means this company. So similarly here the ticker means it's a symbol which denotes a certain combination of a currency. So this is actually these are some of the list of tickers that we have got from Bloomberg. So same tickers you can configure in SAP. So you can see these tickers, right? T170 US Euro USD, GBP USD T170 like this. So basically this is how the tickers will look like. Actually, this particular ticker is for exchange rate types, but you can have similar tickers for interest rate also. Okay, so we have different kind of rates. M rates, M stand for market rates or Bloomberg rates. R stands for regulatory rates. Like as I mentioned in one of my earlier calls, in one of my earlier classes, that we have certain countries like China, which does not have so much fluctuation in the exchange rate because their government publishes rate on the first and last day of the month. It is very similar in Mexico, where it is highly controlled by government. So in such countries, we have R rates or regulatory rates. In India, we have certain controls for export and import. Let's say if you are exporting or importing certain goods in foreign currency, then you have to follow the RBI rates. So those are called regulatory rates or R rates. And there can be many other statutory rates, like for Indonesia, I was talking about that Indonesia always have to follow the tax rate for all their conversions. So these are some of the very common rates. We've got interest rates, we discussed forward curves and bond yields. So now moving to the next slide. So this is one important aspect of market integration. So let me also just cover one more thing. Then I'll show you also some design documents from my project. So basically here I'm talking about certain requirement in Brazil that we have faced, where they have entered the spot. They entered the spot forward on the NDF trades on the Bloomberg trading platform. And these forward exchange rates can be downloaded from Bloomberg in the CSV format or received over email. Now we have a functionality that enables upload of these trades and create deals without any accounting entries. So I think there was a question on this, that how to create the deals automatically from any trading platform, right? So this is something which is very similar to that. So this is also one of the ways where by using your market data integration, you can automatically create deals in S4HANA or in SAP. But obviously, we don't want to do the accounting entry. We'd still like to do the accounting entry manually by using TBB1 for all those deals together, so that we have some controls. But at least we can create the deals based on standard functionality of a program. It is very similar to a BTC program. I don't know if you guys have any background in BTC program, which we often use for mass upload of journal entries. Nowadays, S4HANA has given standard program for such cases. Let's say if you have a lot of posting journals, some companies don't want to waste a lot of time by going to MP50 and post a lot of journal entry. They will simply fill up an Excel sheet and they can upload via any program, right? So this is similar to that. Instead of wasting a lot of time over deals, if you're already using any trading platform, you can simply convert that into deals. So yeah, it is there, but it is only there for cloud platform. And like for example, in our client, it did not have the cloud access, so you had to go for development. But in case your client has cloud license, and you have a standard program which can do this. Okay, so we'll come to the next. So basically, let me just show you the flow also. So basically, this program works like this: where you upload the trading file. This can be automated through a job. Then we can do a test run, and we can read the file through BAPI. Then we can display them through ALV, and you can do an actual run, and then you can upload in SAP by doing an actual run. Then we can create and settle this automatically, and then through a report we can see the values which have been uploaded. So this is something that we can do. In fact, this is something that even there are certain companies like HighRTS and all which supports this kind of programs in SAP, right? As you know. So okay, now let me just come to the something that I wanted to show you guys. So actually, I have brought up a document which is from one of my previous projects where this is like a design document where we have used this design document for creating the reference currency, like the reference pairs and the reference interest rate. So this is how we have prepared this design document. I just wanted to show you so you understand how real-time projects and all do work from data integrations. So we have a lot of pairs. So basically, we want to automate the reference pairs based on the reference currency. So basically, the reference currency is something that we used in exchange rate quite frequently. Like if you know, we use US dollar for M rate, so that we cannot maintain all the pairs, right? Basically, using the reference currency simplifies the maintenance of the exchange rates. So this is what they have mentioned for exchange rate M. We're using USD as a reference currency, and we are using an indirect quote, as you can see here. So if someone wants to convert from euro to Singapore dollar, they can use USD as a reference rate, and system can automatically calculate the euro to Singapore dollar. That is what you have explained here. So in my previous client, we have been using something called Cloud Platform Integration, or CPI, which is basically an integration tool between Bloomberg and S/4HANA to bring the data. So we have got different kind of rate pairs. We have shown exchange rate type M here. So here we have scheduled the job every like 12 o'clock every midnight US time for upload of the daily rates. So you can see certain rate pairs which are like daily rates. I also explained about regulatory rate, right? So a reference currency is not used for art, which will be directly used to calculate the foreign exchange rates to company or currency. Our rates will be sourced based on the frequency provided by business. So basically what it means is that there is really no reference currency for R rate type R. The reason is that the rate pairs are quite limited. And since the rate pairs are limited, it is easier to control or maintain that. And hence there is really no need to have reference currency. Okay. So here again, we have shown some pairs, like as I was explaining for Chinese currency, it is always the first and last day of the month. So depending on the frequency in which the government uploads or governmental institutions upload the pairs, we can also decide on the frequency of the jobs. Okay. So there can be certain exceptional rates like ZNCR that is being used. This is used for India for GST purpose. USD INR fortnightly, right? So okay, so this is something that I wanted to show. Okay, again, as you can see here, we have something called a request file. So let's say what happens sometimes, let's say you have some issue coming up for you, right? When I say issue coming up for you means like, let's say some user is raising an issue that my exchange rate is not matching. So how will you know, how will you analyze it? So this request file actually becomes very important in analysis of such errors. Because let's say if you have to understand why the rate is not coming correctly from the central institution, you have to first understand whether Bloomberg is sending the rate correctly or not. So whatever Bloomberg file that Bloomberg is sending to SAP, that gets stored in the third-party middleware. In our case, it is a CPI server where the Bloomberg file is getting stored. Now, if you want to understand why the rate is coming incorrectly, your job is to compare the SAP rate, let's say in OB08, and the request file in Bloomberg, and also check the actual rate maintained in the central bank. Maybe if it is Europe, then we know that for Europe there is Europe Central Bank, ECB, which maintains the rate. So you have to go to the ECB website. You have to check the rate. You have to check the request file from Bloomberg and SAP. If either of these three are not matching with each other, then we know that our original source of truth is always the central website, which is the, let's say in our case, European Central Bank. So if European Central Bank has told USD to Euro is 1.1, we have to take that as a correct. Now we have to see what Bloomberg has sent to us. If Bloomberg is sending as 1.1, that means there is some discrepancy in our logic. Like when it is getting input in the CPI, there is some logic where SAP is not able to maintain it directly in OB08. But if the problem is in the request file itself, where it is sending 1.2, then you have to catch hold of the Bloomberg. Either the ticket has changed or Bloomberg is sending some wrong data. So that is where the request file becomes quite important. So basically, this is the extraction mechanism. So request file is being delivered daily by CPI to SFTP server in Bloomberg. Okay. So for regulatory dates, the extract times are aligned to the time the dates are available in each country. So basically, see, there can be what I have seen in my experience is that maybe obviously you guys can share your experience for this kind of integration. But in my experience, the daily rates and the month-end rates are often different. What happens is, let's say my daily rate is often a day before. So let's say if I have to use a daily rate for my USD to INR for any conversion, I'll use yesterday's rate. If I have to use USD INR rate on 25th Jan, I'll use 24th Jan's rate. So basically, whatever central banks are publishing today, I'll be using that rates tomorrow. So it is always day minus one in most of the cases. But for month-end valuation, the rates are always on the same day, right? So because month-end valuation is more of a statutory requirement for you, right? So you have to, when you basically scheduling your jobs, you have to be careful. You have to always schedule your daily rates on the same day and your month-end valuation rates on, daily rates on day minus one and month-end valuation rates on on the same day, no day zero. So that is how you have to plan your timing of the jobs. So middle applications, while the extraction process is completed, CPI retrieves the response file and transforms the content to a normalized format that can be distributed as for HANA. So these are some of the request builders. So Bloomberg request file is generated using a Bloomberg tool, and the request file is being delivered to Bloomberg via SFTP. And this is something that we already know, timing and all. So again, we have got in outbound processing and inbound processing. So this is something that we do certain response file to do certain control mechanisms along with the Bloomberg. So this is something that mostly your technical team will be taking care so that Bloomberg and SAP can communicate to each other via the inbound and outbound processing using the request and response file. So you have to give all these fields to your basis team or above team, and they can build these programs for you. How this is more of an interface program for you, right? So you have to basically, this is a standard program, but you still have to engage your technical team to build this. These are some standard packages that will be used. You can see all this from to rate type, valid from, exchange rate from, factor. All this you can basically fill and give to your technical team. Okay, so this is one of the important things, which is the mapping part. So basically here, you guys must be knowing about the factoring ratio, right? So, so there can be certain countries like Vietnam or Japan where the currency is quite, the denomination of the currency is quite low. Like even for Indonesia, like one US dollar is 15,000 Indonesian rupiah. Right? So for those cases, the ratio will be of higher, like 1:100 or 1:1000, like that. Most of the cases, it is 1:1, like for USD Euro, USD INR, etc. So in the response file, you have to give the factoring, because actually, whenever you are designing this, your job is to always check the ratio maintained in the website. Let's say if some country comes to you and tells that I want to automate my integration, my exchange rate, or interested in, let's talk about exchange rate. I want to automate my exchange integration. So your job is to first find out how that exchange rate is factored in the website of the particular country. First, you ask the client that from which website you are picking up this currently. So they will give you the website, right? So let's talk about Indonesia. So in Indonesia, let's say the ratio is quite high. $1 is 15,000 INR. Now, once you know that they pick up their day-to-day activities rates from Indonesian tax website, you can go there, and in the website only, you will find that they're using a certain ratio. Let's say they're using 1:1000 ratio. So that will be a triggered point to design the ratio in SAP. So that when you design the Bloomberg integration, your ratio in SAP and your ratio in the website match with each other, because often what we have seen, Bloomberg ratio and the website ratios are in sync with each other. So if you keep it different in SAP during the design, then it will be an issue for you, because you have to customize the program and you have to spend extra efforts with the above team, which does not make any sense. So you design your ratios accordingly. So that is where it is being told about the mapping and calculation. In the response file, some rates may have a factoring ratio other than 1:1. During initial processing in CPI, this ratio is applied to the exchange rate, normalizing the rates. That is the implied ratio of 1:1. Therefore, the services in S4 receives those normalized exchange rates. When processing the rates, the service looks up the internal factors defined in S4 for each currency and uses as an input to the BAPI to generate the exchange rates. CPI must calculate the exchange rate by taking into consideration the quote factor, which is nothing but the factoring ratio in SAP for us. So they have given some examples how the quotation can be different, and then how we divide and do certain rounding up and rounding down. But according to me, you don't have to go for such complexity. You can simply keep the ratio in SAP same as the website. That is a simple way to design this kind of things. So there can be certain middleware and source and target processing. I think this again are more technical, which a technical team can take care of. There is a simple process flow diagram. Let's see if I can show this to you. Okay, so basically this is the exchange rate coming from your third party to CPI, and then they're converting it and sending it to S4HANA. Then they're uploading the rates, and then the SAP application is starting to using it. That is how it is being shown here. Okay, let me now. Okay, these are some steps to analyze the request file errors. I'm not getting into too much technical details because that will get very complex. Let me just show the configuration for now on the market data management, so that it becomes more interesting for you, because also you have to do certain configurations from functional side. Let me show those steps to you. And that whatever work basis or technical team does, that you can basically leave to them to do those things. Someone who has experience in interface for ABAP, they also should be able to help you on certain things, especially in the mapping, etc. Okay, so I'll show you the system also, but first let me just quickly show the document. So market data management, we will come to the currency part, and you can define the currency pairs based on the Bloomberg. These are the pairs that you can use. Now inside you will have this kind of screen. So again, there are a lot of things like last, ask, bid. So again, these are different ways of extracting the data. Like even on the same day, there'll be an opening rate, there'll be a closing rate, there'll be a middle rate, etc. So you have to ask your client what kind of rates you consider. It can be a selling, buying. So like, some people actually do even trading in the exchange rates, right? So we don't have to go into that much complexity. You just have to ask your client what kind of rates it should be picked. It will be often the closing rate of the day. So you pick up the closing rate on that day. So let's say if it is starting at 9 o'clock in the morning and if it ends at 6 o'clock, then when the closing rate of 6, you have to pick it up. And in your job, you have to basically give the PX last or close accordingly. So you have to give the data provider name, the instrument, source, etc. Yeah. So now let me open the system and show you. Let me first show the interest rates, right? Okay, so basically, as I was telling, that there can be different kind of rates throughout the world, like LIBOR for US, Eurobor for Europe. Then we have got SOFR. We have got MLR, THOR. This kind of different rates are there throughout the world. So you again you have to understand what is the frequency in which this payment is being made. Is it every 1 month, every 3 months, every 6 months, or is it an annual payment that is being made? I have seen monthly and quarterly very common. So if it is monthly, you have to select this payment frequency as monthly. If it is quarterly, then quarterly, and semi-annually, annually, and then again at the end of the term. So based on that, you select your payment frequency. Compounding frequency, you can keep a standard. Okay. Then you can give the long text of this particular reference interest rate. For example, if it is LIBOR rate, then the way we basically name it is like US LIBOR. Basically, US is the country or the currency. Then you can even give USD. Basically, country or currency you can give first. Then you can give the name of the reference interest rate. You can give 01, which denotes every one, and M means month. So this means by looking at it as a glance, you can understand it's a USD LIBOR rate every 1 month. Similarly, if it is 3 months, you name it like this. Just change it to 3. Then you name it. Then you just change it to 6M like this. This is how you basically name it. Then based on the long test, you can give it like AED 1 day or AED 1 month. Emirates. You can give like USD 1 month. Fed, something like that. Then you give your currency. So basically, depending on the currency of the loan or instrument, these things will be applied. Then you have got something like calculation method. So here you can give something like actual by 360 or actual by 365 or 360 by 360, depending on the way your client is calculating. You can give the calculation method here. Then you have got the this is basically okay. First, let us talk about this one. So basically, this is the unit. So let's say I have decided the unit as here they have given 1 day. You can also decide as month, right? So this is month. Once you decide that it is your month, then 1 means every 1 month, 2 means every 2 months, 3 means every 3 months, like that. And again, this is what I was asking you: middle, bid, and ask. You can keep middle, bid, and ask depending on the way you want to get the rates from Bloomberg. So these are the things you have to fill up. And the other things will remain more or less fixed. You don't have to touch these things like date from 1 minus 2. You can just check. There are some additional things. You can keep the standard one. Don't have to change the standard things. You can simply keep the standard whatever values are given. Right. So this is how you give the country here correctly. This is basically the country's calendar will be applied. So this actually is useful in case you want to do some workday shift. Or so for example, let's say in certain countries, the holidays are not considered when the interest is getting calculated. So how will the system know that in which country where I have a holiday, where I have to skip interest calculation, or I don't have to make the payment on that day? So that you can only know once you give the calendar of the country, and you can then do a workday shift. So that's why you have some additional parameters. Generally, you don't have to touch these things. This can remain standard. Just give the calendar of the country, and that is how you can configure. So let's see if we have something for US. Yeah, we have got LIBOR 0.1, LIBOR 3 months, LIBOR 6 months. So this is very widely used because since US dollar is used very widely by many countries, so you will often see this LIBOR, SOFR. These are some of the very commonly used reference interest rates, and this is how you can basically configure them. So once you configure them, then there are certain other things you can configure, but this is the main thing. And then you can enter the rates here. I go to US. Yeah. So you can also configure the long text, etc. here. This is another important path. So now coming to the currency part. So this is the automatic interest adjustment, and then there's something called TI10. There you can give the percentage. So let's say, okay, let me just try to create something and show you. 10. Yeah, so this is a cash flow where I have taken a investment of $5 million, and these are the interest rates. Currently it is 0 because there is really no interest fixed yet. So now let me save this. So just go to this report, give the interest rate, give the transaction number, enter. So here you can fix it. So this is for 5th of Jan. So I'm going to fix it just for this 1 month. Let's say give it as 4%. Save this. Oh, so this is a test system, right? There is really no automation here. I'm just showing how to do it manually.
Speaker table, we can see all the exchange rates, right? The same way,
Right.
is there any place where we can see the interest rate?
This is called OB83, where basically you can see for all the rates. So basically what happens, see, this reference interest rate may be used by 20 deals, right? Now this table is just for storing the reference interest rate for all the deals at one shot. After this is done, there is one more step. There's a program called TJ05. You have to run that program, and that program will apply this this particular reference interest rate for all the deals or for selected deals.
So that
once
is a
you-
manual activity in the daily live scenario.
there is two-step process. One is once you bring the reference interest rates from Bloomberg or third party, it sits here, but that does not readily apply to all the deals. Then there is another step, as I mentioned, there's a program called TJ05 that you have to run, and then you have to apply those reference interest rates for all those deals. Once these two steps are done at one together, then it will apply for that particular deal. Then you don't have to do that PI test step that I'm doing where you have to fix the interest rate. Now, whether you want to do it manually or you can do it automatically, that's again a call that you can design through a job, etc. And even if you do it manually, it may not take a lot of time because you can do for hundreds of deals at one shot. But it is more difficult to put the reference interest rate, one by one from the central functions. But once you have the interest rates, then you can fix it at one shot for many deals. So that is how it works. No, that I've given randomly. OB83 is more for automated way, but since we're just doing a testing, I have given this rate it will manual one will always override the automated one. That's fine.
Yes,
This is how you basically fix it. We give it's a run automatic rate price adjustment screen, but you can give the company code, your fixing date. You can give the reference interest rates and all the you can either specify the transactions or you can give all transactions here. Okay, so let me just skip for next one also. Let's save this. I have to come back. Yeah, so now it is showing 4 and 5 here. If I go to the cash flow, I can see that the calculations have come up. So now I'll try to do TPB and then first post the principal, the first interest. Interest shall post the next step. I've just given the deal number here, the company code and the date. Let's try to the actual run. So if I do this document number, yeah. So basically it is debiting the investment account and creating the business partner. This is the business partner. Yeah. Payment request clearing account. This must be mapped to the business partner. One moment, I'll be checking the business partner also. Where it is blank. Strange. Okay, so it must be processing the one moment. Check one thing. Okay, this is not correct because this is actually directly posting to this shared account. This should be posting to the customer. Let me just post another fresh transaction. This should ideally post to the business partner account. Actually, this is a test system, so not many things are correct. Oh, this is also not modifiable. I think the field status group is not correctly maintained. So anyway, basically, once see the thing is, ideally we should use the payment details like this, where we should use this customer account and post it to the reconciliation account first, and then from that it should do a payment run, and then it should go to the actual bank account. So that is how generally we should follow the design. But here, for testing purpose, they directly just the design is in such a way for standard SAP that it is directly posting to the GL accounts, because the reconciliation account is not a mandatory field here in the business partner grouping. So no, that is not a problem, but I hope you got the point. Basically, this account is correct. It is going to the investment account. It is debiting the asset, and in terms of the credit, it should credit the business partner. Since this is a test system, it's going to the GL account directly. Yeah, but the thing is here, this business partner is not created. Here it is creating the GL account directly. You have to then do the entire configuration starting from the business partner grouping to make the system correct. So now we are just using standard 1710. But that's fine. I hope you got the picture, right? Basically, let me try to just one another document in case you want to see the flow. I'll try to show you the flow. Yeah, this is another document that I prepared long back. Let me try to open an Excel sheet and explain it to you. In case you just want to understand the accounting part, let me try to explain it to you a little better way. Maybe I'll create a fresh Excel sheet. So let's just talk about a simple loan, or we'll just talk about intercompany loan. How it works, the accounting flow. That means on the screen. So let's say you are, giving some, you're doing some. Okay, let's just do some investment only. Investment. Okay. So here, when you post TBBR for the first time, your principal will get booked. So what will happen is your investment asset will get debited and your treasury BP recon will get credited. Okay, let's say 10,000. This minus 10,000. So then you will have interest will get booked. Here your, let's just your interest income will get credited and your miscellaneous bank will get debited. So let's say this is 800. Minus 800. Here, then you will do F110. Let's say once you do F110, your treasury BP recon will get debited by 10,000 and your miscellaneous bank will get credited. And then let's say you do Feb1. Okay, so I hope you guys know about this Feb1, right? So the electronic bank statement part. So basically here you can post clearing bank GLs and the main bank GLs. Okay. Or let me know in case I need to explain Feb1, I can do that. And your main bank created item. So basically this with this flow, what will happen, your principal your principal account asset got debit and your main bank got credited with this entire flow. Okay. And then your interest is directly getting booked here, and again should something like Feb1, this miscellaneous bank will get adjusted. Okay. So now there can be so now let's say the interest is getting booked every quarter on a quarterly basis. on a quarterly basis is getting booked. So what will happen? Let's say you have to book the accruals. Okay. Generally, accruals will get booked through a T code called TPM 44. Here, your interest, your accrued interest basically. So basically, this is your accrual and income will get adjusted accordingly. So basically, this interest accrual will get debited. So if it is 800, let's just divide it for simple reason like by 3. So let's say it is coming to something like 266 INR, and interest income will get created by minus 266, and this will happen on the last of the month. So let's say this is getting booked on 31st of March. Then accrued entry on 31st of Jan will be like this: interest accrual debit and interest income credit, and then on 1st of Feb, it will post reversal of this entry, which means interest income will get debited by 266 INR, and interest accrual will get credited by minus 266 INR. Okay, so this is reversed. This is how that part will. And again, these are all based on assumption that this is a local currency loan. If you have foreign currency loan, then you have to do TPM1 again, which will basically nothing but the valuation entry. So in this case, it will debit the unrealized gain and credit the borrowing or the deposit. Like this. So basically, see, it may happen. There can be certain cases, like in our cases, sometimes the client is not paying on time, especially if it's an intercompany loan, the client is not paying on time. There are various kind of treatments you can do. Let's say if it is a bank loan, then most likely the payment will happen on time. So you can expect that interest income to be credited on 31st March itself, and basically you can, once payment comes, you can just simply book your main bank and miscellaneous bank, and then based on payment you can book this entry. Now there can be certain cases where the client is not able to make the payment on time. Let's say for intercompany loan, that is a very common scenario. So then for that cases, there is a way to handle that in Treasury through 65Q. This is another product, and this does not have any interest. This product is specifically built in Treasury to handle this kind of scenario where the payment is not happening on time, but you basically convert your interest income into your interest receivable. So in that case, you book this entry through TPP1, but then you basically book another entry called interest income debit, and you book your this is investment. So let's say I'm not able to get the money on time, so this will become a receivable credit. Interest income debit, receivable credit. So that is how it's going to be handled, and this receivable will be carry forwarded. Let me go for your loan. So this is, let's say, investment. So let's say here, Here we can directly book the miscellaneous bank debit, and we can credit the let's say intercompany borrowing or liability. So let's say this becomes like this. This step will not be there anymore. This F110 will not be there, because here I can directly book the miscellaneous bank, and I can book my liability. Then this step will come where I just simply I'll have to switch with main bank. So main bank will get debited, and your miscellaneous bank will get credited. So basically I'll just switch this off. So here basically my liability is getting booked with my main bank, right? The money is coming to me, and I'm booking a liability against it. Now here again it will become interest expense debit, and miscellaneous bank credit for this kind of entry. So yes, you can do that. There is really no payment document as such. This is something that, let's say, when you are getting a loan, right, you will automatically see that your main bank will get debited. Basically, you will get the money in your house bank, right, based on the money that you receive in your house bank. Basically, this is like money is coming into your account, right? When you're taking a loan, you don't have to pay anyone. Bank is coming and giving money to you, or some intercompany sister company is coming and giving money to you, right? So you will see that, let's say, 10,000 INR is coming and sitting in your books based on the liability. So there is no payment happening; it's more of a collection happening for you, right? So generally, when it comes to the customer, we do not create any payment document for us, right? This is more of a collection for us. So in case of collection, your basis for doing the collection is a bank statement. Once you receive the money, so this is like a collection only for you, right? Whenever you are taking any borrowing or any loan, let's say if you go and borrow 10,000 INR from SBI tomorrow, SBI will credit the 10,000 INR into your house bank. Let's say if your house bank is HDFC, then SBI will credit that money into your HDFC account. And once you see that credit happening into your HDFC account, that bank statement becomes a basis to book the entry, right? So there is really no payment happening. When payment will be happening if you're investing money or if you're paying to your vendor. But the moment you are borrowing money or you're taking a loan, that becomes like a collection for you. So your basis is a bank statement. And based on the bank statement, you start your liability booking. This one I just mentioned because this will ultimately go to miscellaneous banks to F110. But for this one, it should be like this. I can stop it from here. Whenever there is any outgoing payment kind of a situation, we'll generally book it to the Treasury BP. Yeah, for interest expense, because you have to pay that money, right? So let's say if you want to generate a payment file to your, to your counterparty from your house bank, then you have to book a liability with your business partner, so that you have option to generate the payment file, etc. And even this entry will change. So this will become interest expense. This, and it will get reversed on the next day. and interest deferred debit expense. Correct. And again, if someone is not paying you on time, then you can book your payable here. So basically, but let's say in case you're not able to pay on time, 65 fee only, right? Cost expense credit and interest payable. Again, this will be carried forward like a liability for you. Yeah. So it will depend on the, so if it is intercompany, it has to be 65 week for long term. It can be 65 m or short. Okay. So I think we covered quite a few things, and now I think we can do some practicals. I think there is a request to do more practicals, right? So let's, obviously I've been doing a lot of practicals, but we can do more. You can try to do some interest posting also for this product and see if it works. Considering that it's a test system, I don't know if it will work or not, but let's try it out. Yeah. Let me prepare some document on that. We just prepare on that on the FTP scenarios, and then count 1 1 0 1 0 husband a valid combination. Yeah, to check the. So let me try to modify the data and see. Okay, so basically it is expecting. Right. So basically, whatever GL account is mapped to this, and whatever payment that you're using, based on that, it should read. But I think it is expecting a it's expecting a sub clearing GL, but it is somehow getting the main GL. Let me see what is maintained in the um, 30. Nothing is contained here. Does history even exist? This maybe that itself does not exist somehow. Okay, let's see. So I'm just configuring this clearing GL in the master data. Ideally it should be 1, 2, and 3 series, but I'm just randomly configuring one. Yeah, it's a hidden field. You have to change the field status group. Okay, let me try to select some existing GL and see if it works. Okay, I think I have to delete this one and try to just refresh. Okay, anyway, I'll try to check this because this is actually expected because of this test system. But anyway, this is about T0. I think so. In the next class, we can start with some more practicals and work on the exact theoreticals.
Alright, let's test your knowledge. Here's a question for you. What is the recommended approach for integrating SAP Treasury with SAP Finance? Option A, direct integration using ABAP programs. Option B, integration using the SAP Process Integration (PI) middleware. Option C, Integration using the SAP Landscape Transformation software. Option D. Integration using the SAP connector for Microsoft.NET. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck. Type the correct answer in the comment section. Hey there, wanna master SAP FSCM Treasury Integration with SAP Finance? Our course has got you covered. You can learn at your own pace on our platform. In this course, you will dive deep into SAP FSCM Treasury Integration. Think of it as a toolkit for managing money flow and finances efficiently. From the basics to advanced strategies, we cover it all. Our experts have crafted this course with years of experience. Your instructors are seasoned pros, ready to guide you through every step and clear any doubts. And guess what? Our students rave about this course. Folks just like you have found it incredibly beneficial. Plus, it's budget friendly. Learning this valuable skill won't cost you a fortune. Ready to ace SAP FSCM Treasury Integration? Enroll now. For more details, visit ZaranTech's website.
Okay, let us start with the standard disclaimer. This presentation includes examples, images, and references which are provided for informational purpose. Complying with applicable copyright law is responsibility of the user. Without limiting the rights under copyright, no part of this document can be reproduced, stored, or introduced into the retrieval system or transmitted in any form or by any means. Credits shall be given to the images taken from the open source and cannot be used for promotional activities. No, so basically, there is some position management procedure that you have to configure for those valuation part for TPM1 and all, and accordingly we have to configure it. The basic account determination part remains the same, but we have to do some additional configurations to map the position management procedure part. And in terms of the foreign currency valuation part, that will only come into the picture if the company code currency and the transaction currency are not matching with each other.
Yes.
No, when they're not matching, because like if the company code is in dollar and I am doing a loan in euro, only in that case the foreign currency valuation can happen, because my asset or liability is in euro, but I have to evaluate that every month in dollar. But if both the company or currency and the transaction currency are same, then there is really no foreign currency, right? Everything is in local currency. Taking the account will be fine, it will be same, but there will be some additional configuration for position management procedure. And actual and deferral also will come into the picture whenever there is any kind of quarterly interest payment or quarterly expense or income, and I need to accrue it every month to for my month end closing. That's where the accrual part will come into picture. Right. There will be configuration needed, because accrual deferral again, if you have to tell the system to pick the GLs automatically, then you have to do the PMP configurations. That will cover. So here I don't think it is configured properly, but this is just a standard configuration. But here you can basically configure the position management procedure, and this is more or less the standard settings that we configured here. It actually tells us whether to amortize it at the end of the term, etc. We generally keep the same kind of configuration, and so we can configure this kind of procedures here. Valuation procedure 1000, 2000, 9000 like this. And another important step, we show the valuation currency. Yeah. So this is rate, exchange rate that we want to pick up here. So here standard M rate is being used. Then whether it's book value or not, right up to purchase. So basically these are the things. Then mark to market value, whether you want to do this or not. So these are the things that you have to configure. And Then there is an assignment also. And this is also the definition. This is forward exchange. So here I can give this rate valuation for forward exchange if it is forward exchange, and this is a PMP procedure that I am assigning to the actual procedure. Procedure is defined first, then we assign this PMP to this procedure. Down. So here we have got step 1 and step 2. One is for posting the transaction, and second is to reverse the transaction. Basically, whatever valuation you're posting, you have to reverse on the next step. Then you have to assign this PMP to the respective product type. So if I come down, like 53A product. So 53 is for commercial paper. This is the product type that I am assigning to 2600 position management procedure. So this is where system will understand that I have to assign this product with a position management procedure, and that will be linked to a procedure, and that is linked to the amortization. So system will start performing the amortization as and when we'll use these products in, let's say, TPM 44 or so. Then we are assigning 2600. So these are some standard PMP procedures that we can assign to multiple product types. The same position management procedure is 2600 that we're assigning to multiple product types. And again, you can give the valuation area here. 002 is assigned here. So we may have two valuation area. One will be local cap and one will be the IFRS that we can configure here. So if I just come down to the foreign currency valuation. Yeah, 60A, which is the foreign currency valuation 00. 60A. It is assigned to 4,000. Yeah, 60A. So basically 001 and 002 60A product type, and 101 is spot, 102 is forward, swap, etc. These are this should be 4,000. Yeah, this is correct. So 001 for 60A is assigned to 4,000, which is the standard position management procedure that we have to do. Once we do this, system will be able to understand that I have to do the actual or deferral for this kind of product type. This is the additional steps we have to assign. So so we can do two things. We can start with the payment request part that I wanted to cover today. Also, what you can do, since we have not done practicals, we can do some practical. It is good if all the other team members also at least create a basic deal and just settle it and post the principal or interest in TBB1. That will I think will give you some more confidence. So everyone, is it like for all of you have done it, right?
Yeah, we all together we did it on Saturday.
Okay, great. Okay. So so let us then start with the payment request process. So basically, so today we are going to cover, okay, let me first just take you through the three processes that we're going to cover. So we are going to cover three types of payment requests today, because I think some of you have questions on the payment request part. So as you know, payment request is a way to configure payments for certain activities which can be without a sales order, a purchase order for your vendor customers, or it can be a bank-to-bank transfer. And even as Amit mentioned some time back, there can be cases where you're creating a payment request instead of a payment run upon on zero for treasury counterparties. So let's say we know that we can do payment requests for treasury, but there can be some other ways also to create payment requests. And this kind of things are very interesting or useful when it comes to cash pooling, or when it comes to cash management. Now, uh, the thing is, there there are different ways of handling cash management. We'll cover cash management in details in our next class, but just to briefly let you know, there can be processes um, which can be decentralized for certain companies. In case of decentralized cash management process, where there is really no in-house cash, in those kind of cases, there are a lot of times where when I want to transfer my cash from, let's say, from distributed accounts to a centralized account for a better investment rate, etc., I can use this kind of processes for payment request, where I can transfer money from one of my source bank account to a target bank account through bank-to-bank transfer. So these kind of things can be useful for such companies which do not use cash management very actively, but they also want to have a certain process, like more of a manual process to create payment requests for their clients. So for those kind of companies, this bank-to-bank transfer will be very useful. What I'm sharing here is a bank-to-bank payment request transfer process. Previously, we used to handle this through repetitive code in SAP ECC. So this is one of my unit testing documents from one of my previous clients, where you can see there is something called define bank transfer template. So these templates actually can be useful if someone wants to do same kind of bank-to-bank transfer many a times. Like for example, if I want to always transfer, in case of Indian company, let's say I have a very need to often transfer money from HDFC account to SBI, and the account numbers are more or less fixed. So I don't need to give the same information again and again in the system. I can actually create a template which can be very useful, and that will save me a lot of time. I know my target and source account number. I just simply have to just put my amount, and that will instantly create a payment request. So this is where this kind of templates are quite useful, which you used to handle through something called repetitive code in ECC, and now we're handling that through this Fury app called Define Bank Transfer Templates. So I'll show you in the system, but before that, we can simply just have a look here how it looks. So this is how the app looks like. This is called search, editing, button, payment, paying company code, and paying bank account. You can click on go, and it basically brings up all the transfer templates that previously are already created. You can also click on this create button here, and once you click on create, it opens up this new screen. Okay. So here you can give some repetitive code number. It can be some specific number that you want to give, so that it's easier for you to track. Maybe HDFC SBI T, which means transferring from HDFC SBI transfer. Then you can give the paying bank account number here. You can give the company code here, paying house bank and paying house bank account number. Then receiving bank account number, receiving company code number, receiving house bank, and receiving house bank ID. So these are the details you have to fill up here. And if you also want to, give some more details, like some comments that transfer from this account number to this account number, you can do that also. So this is how we basically. Mostly this is used within the same company code. We cannot use for intercompany. The reason being, generally for intercompany transfers, there is always an interest or a loan that comes into the picture, right? Let's say if I have to give a loan from, let's say, Bangalore TCS to Mumbai TCS, for let's say 10 lakh for even a month, then Bangalore TCS may think that I can invest that money in a fixed deposit and earn some interest, but I cannot give that money for free. So I need to earn some interest. And I also need to track that, right, as a loan. It's an intercompany loan, which also needs some recovery. So that's why we do not use this process for intercompany transfer, right? For intercompany transfer, if you remember, I showed you on Thursday or Friday the intercompany loan process, right? How
Right.
that will apply there.
Okay.
Yeah. So if you see here, the receiving company code and paying company code, I've given both as N001 here, right? So there are certain configurations you have to do even for this to work that I'll show you in some time, but this is how the process looks like. So just fill this template. So basically, see, the thing is that the reason why I wanted to discuss this is because the cash management is something which can be very different from company to company. It will depend on the kind of practices they are following. Like I think some companies are following the in-house cash process. Some companies are using this payment request manual process. And some companies may even simply use a cash pooling process. So I'll discuss the cash pooling process also, right? Again, this is slightly different from cash management, because cash management is more about forecasting your cash position and then taking a decision. And this is more about the execution. Once you take a decision on your cash position, how do you basically manage your money to get a better return, or let's say if really there is a deficit, then how do you basically use the surplus cash in another account to manage your activities. So that is more of the execution thing. So today we're discussing more on the execution of cash management through the payment request process, and I'll also see if we can get time to discuss the cash pooling process. And in another class, maybe tomorrow or day after, we'll discuss on the actual cash management process, which is a cash forecasting. Okay, so anyway, we'll just go to the next slide. So once you click on create, this repetitive code or this transfer template gets created, as you can see here. And we have a bank account number here and a receiving account number here. And we have got the respective, account IDs, receiving bank account description, paying house bank account, all these things we have got here. Then this, okay, so this is the step one where you have created the template. Now in the step two, we have to use another Fury app called make bank transfer create with templates. Here you need to basically, when you come to this Fury app, basically you can just search, or you can even in the blank screen, you will already get the transfer templates which are created in the first step. So now you know that these are the combinations that I've already created for me, and you can use one of them as per your need, and you can click on that here somewhere, and you can go inside. Then just go inside, and once you go inside, you can so just give the details here. For example, in the second screen, I have given the transfer date, I have given the amount, and I click on create. So once I click on create, I'll create a number called payment request. So payment request 002 created for repetitive code, WNRG, and this one. So this is how you create a payment request. So now you can see, if you come back and just click on go here, now you'll be able to see the payment request numbers that is created for make bank transfer screen. Okay. So now if we just click on this arrow here, it takes you inside this screen, which is the actual money, where you basically, let's say, want to transfer from this account to, let's say, this is a paying account to another account. Let's say from concentration account, you want to transfer some money to SAP Treasury. you simply just go inside, and let's say you want to transfer $1,100. So you come inside, and you can see the screen. So now if you have to click on release, then it basically just releases a payment request. That means it is ready to pay. And if you click on pay, it creates a, so if you click on pay, it is going to bring up this drop box, and you just simply click on pay here. And once you click on pay, a F111 account run ID automatically gets processed, which means the F111 is run and your payment request is created. So this is how it looks like. So now you can go to F111 screen. Even there is a Fury app called automatic payment transactions for payment request. You can go through the Fury app. Here I've given the GUID screen. This is how it looks like. And there you will see the payment document created. So you can actually view the accounting document also. So this is one of the cases of bank-to-bank transfer payment request. And you can either use F111 for bulk payment. So let's say you do not want to pay the payment request one by one, then you don't have to follow the process. You can simply, there is a way even in F111 where you can give a list of payment requests or a range of payment requests and can make payment at one shot. Very similar to F110 screen, where instead of giving your vendor number or customer number, you can give your range of payment requests and you can make the payment. Okay, so this is the bank-to-bank transfer process. Now we can go to the configuration. Let me show the configuration, and then we can see in the system. So, so basically now I'll show this in system also, but just I'll first let me show you. This is one of the configuration documents from my client. I won't be able to share this in the material, but let me just show you on the screen for now. So this is basically, you can simply go to the bank accounting path and click on the define number ranges for payment request. So whatever payment requests are getting created, whatever number is getting created, we can first create this number range so that system can create that number as a payment request. So this is very common thing. This is nothing to explain here. Just click on just create the number range created. So then you have to this ABZP part is a common thing. Basically, what happens? Okay, when I was showing here, I probably missed showing you the payment method thing. Yeah. See, there is something called N bank-to-bank transfer payment method, right? Can you see this? Can you see this payment method thing? N bank-to-bank transfer.
Yes.
Yeah. So so we basically, this payment method is the linkage how your FTP1 is used, and this payment method is basically the code of how the GLs also will be picked up. So when we are doing the ABZP, we have to configure this payment method per country. So let's say if it is for US, you have to go to payment method per country, and you have to go to US country and give this payment method N. So then again, S is something that you can create for maybe another payment type request. Anyway, so I'm just explaining with one example, which is N. So here you can give minimum amount, maximum amount, whether the foreign business partner is allowed or not. So this is very similar to your ABCP configurations. You can give the correspondence, etc. Then there's payment method per company code. So let's say if you want to extend this particular payment request process in 5 or 6 company codes for US, you have to create this N bank-to-bank transfer payment method for each company code. Okay. So then there is something called bank determination in ABZP. So in ABZP, you have to also configure the house banks linked to this payment method, right? So this is how you basically link your house banks. Then you can also go into the bank account level and you can basically configure the bank sub account GLs and the account ID for this house banks with this payment method. So again, there is something called planning level that we'll discuss later in the next class for cash position. So now let me show you the GLs that will get like the GLs that will link to the receiving or the paying account. So basically, whenever we are selecting the receiving or paying account in payment requests, we also have to define the clearing GLs for the receiving bank. So if I go to this particular path under financial accounting, bank accounting, then business transactions and payment transactions, payment request. So we have done the define number range part and all. Now we are clicking on this define clearing accounts for receiving bank for account transfer. So here we can give the company code, the house bank and the clearing account. So this will be your clearing account that will be used. Okay. Yeah, so basically, so I have deleted some from a previous client. You can ignore this. So again, you can check your GLs from your client only, whether they want a miscellaneous account. Generally, it's a miscellaneous account, right? Incoming will be 1 series, outgoing will be 2 series, and miscellaneous will be 3 series. Our client has requirement to make it for 4 series, so we have made it in this way because of the GL mapping. There is one more node called payment handling part where you have to also do the bank clearing account determination part. So you can simply come to this again, bank accounting, business transactions, payment transactions, not on the payment request, in the payment handling. Click on the define account determination. So here you can basically define the sub accounts under the account ID. So you can define the sub accounts here for your different house banks. You can do that. Yeah, this is fine. This is just a GL table. It is similar to bank determination, yes, but we have to also configure your paying and receiving GLs, because the bank determination you can only give the house bank,
Yes, yes.
right? House bank related sub accounts, right? So system will not know the clearing GLs which need to be populated during the payment request in F111. So for those
Okay.
additional GLs, you have to configure the steps. So okay, let me cover this part also. Are you guys aware about these planning levels and planning groups by any chance? So, okay, so Renu, maybe you want to just give it a try. Yeah, generally planning groups are used at the business partner level at a master data, and planning levels are at the GL. So let's say if you want to assign a particular domestic vendor and foreign vendor separately into a planning groups, you can use certain planning groups. Let's say one, maybe 1, 2, 3 domestic and 5, 6, 7 as foreign vendor or customer. And planning level is something that we assign at a GL level to assign whether this, or let's say if you have got 5 banks, HDFC, SBI, Axis, and Kotak Mahindra, and there are 5 banks. And those 5 banks have outgoing GLs, main GLs, incoming GLs, right? So you want to group all the main bank under a certain planning level. You want to group all your outgoing bank into, let's say, outgoing planning level. And your incoming, all the Kotak Mahindra, let's say Kotak Mahindra has got 5 account numbers. And those 5 account numbers will be linked to 5 main bank, 5 outgoing, and 5 incoming GLs, right? You do
Right.
not want at a Kotak Mahindra or SBI level. You want what is my overall incoming level, and what is my overall outgoing level, and what is my main bank level. You don't want at a bank level. You just want at an overall level at a main, out, and incoming. Let's say if you
Right.
want to just get your overall, let's say as a person, you may have 5 bank accounts. But if I ask you that, Renu, what is your net worth? You don't want to give me your details of all the account. It's about
Yes,
5 lakh
yes.
balance in Kotak and 10 lakh in SBI. You just give me my total net worth is, let's say, 1.5 crore, because I have got this much balance in my main account, and probably I also have a loan of, let's say, 20 lakh, with my outgoing GL, and another asset of, let's say, 50 lakh as an incoming GL, which I'm about to receive from some of my clients. So that's the overall picture. So that is where planning levels will be of use to us. So planning groups are similar, but planning groups are actually used at a business partner level. Like if I want to assign it at my domestic vendor or foreign vendor or customer or at a bank master level, that is where the planning groups will be used. Planning groups are not mostly used not at a bank GL level. That is used at your master data level or even at a memo record level, because with combination of planning level and planning groups, I can understand. Let's say if I have a purchase order open with me that does not have any GL impact, right? Yeah, so that is where planning groups can be
So,
useful. So anyway, I think this we can cover more details in the cash management session. So okay, let me just before I go to the third party or other things, let me just open the system and just try to create one bank to bank transfer. The thing is, again, this is a test system, so in case it does not work so well, we have to probably do some changes in the system or maybe do some correction the way we faced last time. But let us try to. I think since I have got access to every Fury app in the world, it's a little slow. So we have already got some liquidity codes here. Let me just go inside this. Function is not so important. Yeah. Okay, so let me just try to use the same combination and create another fresh repetitive code. Just click on this create button and it will take you to this next screen. So you guys are familiar with the Fury apps, right? So let me just name it as like maybe RC008. Okay, and here let me just check. Okay, let me do one thing. Let me first check. Oh, okay, so there is no bank account number here. That is the problem. Okay, we go to USB. Okay, this has some account numbers. I use. Yeah, so this has got picked up correctly. So now let me try to use another account number for payment method. Okay, let me check the configuration so that I can check the payment method of SAP. Yeah, these are the USB one is already there, which is fine. So I'm taking USB one only. So that is okay. Let me. Okay. Okay. So basically, the receiving is the problem. Things. Okay. So here I can see some payment methods. What is T? Let's see. T is rupees bank to T is also bank transfer. So I can use maybe T. Use T. Okay. I'll use T here. And okay, again this is USD. So we're using US dollar. And I use this US SH1 account number. Okay, I think there is some problem with this. With again some problem with the test system. But you guys got the picture, right? Basically, you have to get the payment method from this configuration, and you can understand what are the accounts from which you can make the payment. So this is the paying account details, and the receiving account details are mentioned here. You know, define clearly accounts for the receiving bank. So the receiving bank will be receiving bank. I can see USP1 is already defined here. So I can simply take any receiving bank USP1 and I can give any receiving account. And I simply click on create using the right payment method and currency, and it creates a template. But I think there is some issue again because it's a test system. I need to check this SAP note, and then you can understand what is important. So okay, let me just try to do the bank transfer now. If I can make a bank transfer using this template or the existing templates. So these are some existing templates which are already in place are C001. Let me see if I can use this and do something. So okay, I'll go to make bank transfer. Create with templates. So there are two ways to make bank transfer. One is you can even create without a template. Here you don't have to use this account, this template created. You can simply just try to create a fresh one. So first let us try with the template. If it works good, otherwise we'll probably try to create a fresh one. We'll just select this, create. Okay, I think there is this repetitive codes will not be correctly configured. That's why if you see my screen here, you will automatically see these other buttons with amount, etc., which should be there, amount, date, but we cannot see those buttons here. Okay, let's just try and make bank transfer without any template and see if that works. The amount is already selected, right? It's still not coming up. Anyway, let's see if this one works. Fortunately, it's not support. What is this? Okay, 1710. Bank. Yes. USPK1. Bank. No, that is fine, but here I am constantly getting some pop-ups whenever I'm trying to use this Fury. So let me just try this one quickly. If I face any, because I'm not getting any account termination error, I'm just getting some pop-ups. I'm just trying to close this. Let's see. So this receiving account. This is a pay. 1 second. Let's check the configuration. Yeah, so this is receiving. Receiving one is this is fine. This is payments. This might be US ACH1. So US ACH1 is this. So this is a paying account. Yeah, this is a paying account. And this is a phone number. Okay. Oh, I think there is some problem with this Fury app. No, don't know what is the issue. Can one of you try? Can one of you open the Fury app and just try? I'll guide you what to do because whenever I'm trying, this is either giving pop-up or just getting blank in between. So what you do, I'll tell you, this is a paying bank account. So just use USBK1. Yeah, so we can continue renew, or we can probably just close this and just try if it works. We're good. Otherwise,
Okay.
it will be create repetitive code and then a bank-to-bank transfer. I think I'll tell you the decode also. Just give the company code and you can click on enter. And if 100,000 whatever amount, give some reference, maybe test or something.
Okay.
Try to click on create payment request and see if it works. Okay, so they must have been used. Can you create a fresh repetitive code and then click on create new, like at the top? Yeah, right. Use them. Yeah, use bank. Did you release that repetitive code? Go back to OT81. You have to release also. What is the error message number? Pay method and account. Seems like a message we should see. What about 1710? Can you check for 1710? What of it's USBK1, right? Which maybe you can just come back and just try to go to the screen once again because you're deleted and now you're. Yeah, we can do that. Generally, even if you do not go at a account level, it's fine, but you can do that because generally what happens is that, let's say, even if a receiving bank is generic, it is okay. It is a paying bank which will trigger the file or which will actually control the settings, right? The receiving bank can be anything. That's why. So coming back to the next kind of payment request that we have. So this is called, let me show the PDF first. Yeah. This is called free-form payment request. So there can be cases where apart from more, yeah. So there can be certain cases where we have needs even in the finance for creating payment request, not just in treasury. So bank-to-bank transfer will be considered as treasury, and there can be even treasury payment request for if forex or a money market product, even that is treasury. But there can be certain cases where you need to create a free-form request for a vendor or for a customer or even for a normal GL entry. Let's say you have an insurance payment or an expense coming up, etc. So generally, this is not a recommended process because we have purchase order, sales order, or bank statement integration for your this kind of postings. But there can be certain cases where for a very small payment, the client does not want to create an entire process of delivery or three-way matching or bank statement. If it is a very small miscellaneous kind of a payment, they simply want to just post it through payment request. So in this kind of scenario, free form payment request is used. So as you can see here, we have a GL account, but here we will see three options: GL, vendor, and customer. And once you click the right account type, you can select the vendor number or GL number or customer number, and you can make the payment. So here you can give the details here, like the name, the country, bank key, bank account of the payee, and this is where. So since we do not have a proper here, since it's more of a manual kind of a payment, here we will not source this destination accounts from the business partner. We have to provide this pay account details manually in the system. Then you can choose the company code and the account type in which you want to make the payment. Then in the lower screen, you can select your house bank, your company code, paying company code, and your account ID from where you want to make the payment. So then you can click on more button and click on the payment. So we'll see that a payment request is created and a document is posted. This is how it will look like. So then you can go to this another Fury called automatic payment request for payment, automatic payment transactions for payment requests. So this is very similar to FTable1 in Fury. And since you have created a payment request, you can simply give the company code, the payment methods, and then you can simply just post it. And this is how it will look like. And this is the payment log where you can see the document posted 2003614, and this is how the document entries will look like. So it's a very similar process, but that is more for a bank-to-bank transfer, and this is like a free-form payment request where system is giving you the choice to do the payment request for any kind of account that you want to from the finance side. Okay, this is GUID. This is a GUID process. I don't want to cover because anyway you're all using S4HANA. It's fine. Okay, so we have been we just saw that we have used payment method T in the previous payment method N in the previous transaction. T was in the test client in our server in ZaranTech, but in my previous slide we have used N, and here we are using payment method S. So you have to basically also, in case you are configuring the FBZP, you have to also configure the FBZP for S here, and then you have to define all these things for your configuration for field from payment request. So here you can do the same configuration, define clearing accounts for cross. So this is cross country bank account transfers, and you can basically go to this configuration node. I'll show this configuration node in the system also, but this is how it will look like. You have to just give the company code and the payment account number. So this is for the payment request account determination. Then you have to go to your go for a similar configurations. For just one moment, I'm getting a call. 1 second. So this is a payment method per country, and this is again very similar, as you can see. Then we have got the company code level extension of this payment method S, and then the bank determination part. All these are very similar configurations. I'm not going into more details. So here we have to similarly define the clearing account for the payment request. As you can see here, it's fine. Entries auto note for the payment process steps. So here under online payments, you have to click on this define process steps, and you can basically do all the steps. This is more of so basically, see, the thing is, this is actually needed because in our client they wanted a dual control for a release process. Like for example, they don't want the payment to be directly made, but they wanted someone from the manager level to first approve, because they want certain controls on the payment. Like if you know, even in F110 you can have payment workflow approval controls, right? Through SBWP, you can do BCM approval controls. So similarly, we have a way to control the payment request approval also. So in that case, you have to do a dual process, like a dual control. You cannot do the payment request directly by a user unless the manager or someone senior approves that payment. So you can do such steps if you want to implement a release process. Like you can see, we have implemented the release process because anyway, it's a free form. So in this free form, the problem is in bank-to-bank transfer, it will always be from one house bank to the other house bank. So the money is always within the company code. But in free form payment request, there's a risk because you have permission to make payment to any kind of vendor to any payee account. So let's say if I want as an employee, as a very junior level employee or as a new person, if I want to make payment to any pay account to any vendor, right? And if I can even control the destination account number, so I can simply put even my own account number and click a free form payment request, and then I can do an F111. So and if my payment file is automated, then that can trigger a payment request and a payment file to that destination account number. So this is a little risky as it's a manual process. So it is often recommended for such free form payment requests to have a dual control. As you can see, we've implemented the same thing. And then let me show you another, we know it is 4 minutes in, but let me show you another last form of payment request called third-party payment request. So this is a payment request for your business partners. So far we have seen bank-to-bank transfer and free form. So free form is for your GL vendor and customers, and this third type of payment request is used for third-party payment request for your business partner. It can be directly to your, let's say, bank, if you want to do that. I mean, third-party bank, not your house bank. But bank-to-bank transfer is from one house bank to the other house bank. Let's say if I have got account in HDFC and SBI for same company code, I can do that. But if I have taken some money from Wells Fargo, then I don't have capability in bank-to-bank transfer. For that kind of a thing, it's a third party or a separate bank, which is not a house bank. So for that kind of thing, you have to use this third party BP payment request process testing. Okay, so obviously the prerequisite is that you need to have a business partner in your system as a first step. Then you can go to, okay, this is OT81. OT81 is again for Fury. Actually, here they have given this kind of screen, which is more of repetitive code screen only. It's a shell tile. The reason is actually in some cases what happens is for some functionality like this, it's not very widely used. So whichever is not a very widely used functionality in Fury, sometimes SAP does not invest time to build separate Fury app. They will give a shell tile. When I mean shell tile, what I mean by shell tile is that they will give a similar kind of a interface like ECC, but that will be accessible through Fury. So here you can just go to repetitive code, which is like a shell tile 4081, very similar, where instead of using GUID, you are simply using Fury. It's very similar to the same screen that Renuvoku entered, right? Where you can simply create the repetitive code. But here, instead of bank or vendor created, you're choosing central business partner. So here you can give the business partner details. Maybe let's say Wells Fargo or Citibank, etc. Whichever is your business partner. Let's say you have to make some, bank charge payment to your Wells Fargo. For that kind of case, you can use this kind of thing. So you can simply give business partner the bank details you can provide here. Then you can give the target company code, GL, account number, payment method, and currency. And then you can create your repetitive code. Then release this repetitive code, like we have also seen the release process which Renuvoku showed. Then you can simply use this FRFT underscore TR. Instead of underscore B, for bank to bank transfer, it should be underscore TR. And TR means treasury partner. So you can use the same repetitive code here, give the amount and the text, and you can click on payment request, and payment request will be generated. So this is how the payment request journal entry will be looking like, where it is going to a suspense account or a miscellaneous GL suspense account, expense to debit, and payment request clearing account, GL credit. Then you can just come down and you can simply click on pay here. So this is more of a shortcut. Instead of using F111 or automatic payment transactions for payment request, you can simply click on pay here, and that will automatically create a payment F111 process. As you can see here, it has created a payment and ID and date. So you can simply go to this and you can go to the payment log, and then you can see your payment clearing account will be debited now, and your bank account will be the clearing account is debited and your bank account is credited. Okay, and this is the journal entry where your payment request clearing account is debited and your bank outgoing account is credited. So these are the detailed payment request process. We have covered all types of payment request, treasury, non-treasury. So hope you got some idea on the entire payment request process. But again, I can discuss on a high level because these risk analyzers is something that is not very frequently used in the market. Hedging and exposure will definitely discuss, but this market risk, credit risk, and portfolio analyzers are not very often used. Mainly, market risk analyzer is more of market data management, and once you integrate, you can basically analyze the risks that market data is posing to your company. So I can go give you overall view on this, like what is the functionality about, etc. But it's difficult to go into more of configuration or transaction level details because, as I mentioned, this is very rarely used by companies. They are now using predictive analytics or other other kind of tools which are like outside SAP. Like there are a lot of other advanced analytics tools which have been in the market nowadays. Like once they get data from SAP and other market data, they can use those analytics tools for this kind of analysis, and they're really using these tools. So that's why even I have not worked in details of the configuration or implementation of this, but I have overall idea. Because I have worked in analytics to a certain extent, I have overall idea. So I can give you the basic functionality view for sure. How the interest rates and exchange rates are being coming from. So if you want, I have worked on Brazil integration of a trading platform. I can try to see if I can get some. The thing is, I also need to get a document on that, right? I can explain in a better way. So that is one challenge from my side because I can explain overall, but if you want more details, I have to get those documents and everything. So let me see if I can get a document on the Brazil integration of a trading platform. That was also Bloomberg only, but that was more of a deal integration. So I'll see if I can get the document. I can then explain that. So tomorrow, let us discuss cash and liquidity management.
All right, let's test your knowledge. Here's a question for you. Which of the following is a key benefit of integrating SAP Treasury with SAP Finance? Option A, improved cash flow forecasting. Option B, enhanced procurement processes. Option C, better inventory management. Option D, streamlined asset acquisition. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck. Type the correct answer in the comment section. Hey there! Want to master SAP FSCM Treasury Integration with SAP Finance? Our course has got you covered. You can learn at your own pace on our platform. In this course, you will dive deep into SAP FSCM Treasury Integration. Think of it as a toolkit for managing money flow and finances efficiently. From the basics to advanced strategies, we cover it all. Our experts have crafted this course with years of experience. Your instructors are seasoned pros, ready to guide you through every step and clear any doubts. And guess what? Our students rave about this course. Folks just like you have found it incredibly beneficial. Plus, it's budget friendly. Learning this valuable skill won't cost you a fortune. Ready to ace SAP FSCM Treasury Integration? Enroll now. For more details, visit ZaranTech's website.
So let us start with the standard disclaimer first. This presentation includes examples, images, and references which are provided only for informational purposes. Complying with all applicable copyright laws is the responsibility of the user. Without limiting the rights under copyright, no part of this document can be reproduced, stored, or introduced into a retrieval system or transmitted in any form. Credits shall be given to the images taken from the open source and cannot be used for promotion. We have discussed 3 types of payment requests, right? One is bank-to-bank, second is free form, and third is the third-party payment request. And we have reviewed the configurations as well as the processes for payment request, as well as the automatic payment program for payment request, which is F111. So as a continuation of yesterday's session, we are trying to cover cash and liquidity management. So maybe we can first understand if someone has any questions, and if not, then we can start for today's session. Today we're going to explain the cash management process and the key drivers of cash management process, and also something called memo records in cash management process. I know there are some additional questions on the disk analyzers, etc., which we'll be covering them in the subsequent classes. But for now, let us go ahead with this. So basically, the overall structure is that we gather different information from our own ERP system as well as from the market, and based on that, we basically try to derive the cash position and liquidity, and then the controller of the company will decide on certain factors or certain decisions. It can be investment, it can be loan, it can be a working capital loan, etc., based on the cash position. So this is a very important factor for the financial management to take decision in order to continue on the day-to-day activities of the business. So as you can see here, we are collecting the market information. Then we have some cash management decision to make, and then we'll be doing certain trading activities, which can be investing or which can be loans based on the decision. Again, this cash position and liquidity forecast are part of this decision making. So in general, the elements of cash position are the bank accounts in the currency. So basically, we need to understand in which currency you want to draw your cash position. And so based on that, we need to have those bank accounts in that currency to understand how much surplus or deficit I have in my cash position. So we'll have various accounts, and based on the combination, we'll get various bank accounts. In general, market information is mostly external information, something that is available, let's say, with Bloomberg or any other trading platform, be it FXall. Or, for example, let's say if you have a fixed term deposit, right, of a certain interest rate, and let's say you know that the Fed has already increased the rate more than that fixed term deposit that you already have. So you can take a decision that I don't want to continue this fixed deposit. I probably would, prematurely break this and do a better investment. So that can be useful based on the market information of the interest rate. There can be cases where you have different kind of variable loans in the market. Based on the interest fluctuation, you will understand whether these loans are worth continuing, or can I negotiate a better rate. There can be certain cases where you have AP financing or factoring with your customers or your vendors, where based on the so for example, what happens in a lot of companies is that especially companies which are low on cash, they do factoring, where let's say you have some customer receivables that is coming up. So customer receivable, based on the customer receivable, uh, which will be probably paid in next 3 months, you are going to take a short-term loan for next 3 months. So then you will be taking a factoring loan from one of the banks. So you will be taking the factoring loan based on a certain interest rate, and you will be taking that loan based on the information whether you have enough surplus or whether you have deficit, or whether let's say you have some surplus money, but that money is parked in a fixed deposit which is giving you an interest rate of 8%, but the factoring loan of next 3 months for the working capital is available at 4%. So then you can probably take a factoring loan for a short term compared to breaking your fixed deposit to get the surplus. So there are a lot of decisions that are linked to interest rate, or speculative. Yeah, you are basically, let's say you are expecting something in the future, and then again you already have some interest loan that is in your system. So your market information can, like, if you remember, I have given some examples in the past that you have certain information available in your system, but based on the exchange rate speculation or based on the interest rate speculation, you can make decisions. Like, for example, if I know that USD INR rate is going to increase from 80 to 90, I can make certain decisions where I'm going to fix a forward, or I'm going to take a loan accordingly. So all these are part of market information. Without understanding the forecast, without understanding the market information, you'll not be able to take those decisions, or you'll not be able to correctly forecast your cash flow. That is where this market information becomes useful. So this is one part of the thing, which is the bank account. Then the second part can be the payment transactions, which can be incoming or outgoing. Then we have the financial investments and borrowings. So even this can be used for your liquidity forecast or cash position, because based on the due date or the payment date of your investment or your borrowing, you know that you have an upcoming payment to be done, or you are going to receive certain interest. And then obviously we have got the invoices, APAR, purchase order, sales orders. Even this can be linked to the cash position based on the payment terms to derive on the cash position. So these are all the factors based on which you can derive the cash position. So this is conventional ECC transaction, how it looks like. So this is how it used to look like in the past, how we can forecast the cash position for different months or different dates. There's a T code called FF7A. This can be useful for those forecasts. So basically, this is integrated with the AR, with the AP, and it can be again linked to the purchase, sales, anything else. Based on the way the information is captured in the system. It can be through a PO, through a sales order, through a delivery, through an invoice booking, and even through treasury. So basically, see, in general, there are two ways to handle this. One is the conventional way of cash position, where there is really no linkage of cash position until the bank account gets hit. That is the conventional cash position, which will actually be only relevant for you when your main bank account gets hit. That is
Right.
how you can group it. The second way, we have got a few advanced apps in Fury where you do not have to actually make any posting to reflect in your cash flows. There are different, uh, through planning groups and planning levels, there are different ways where you can switch on or switch off what you want to see in your system. It will show, when I show the cash flow analyzer report, probably will understand when you switch on or switch off certain areas, you will be able to understand whether I can keep my purchase order or sales order information intact, and it will bring up all those information as an amount, as a forecast for you. So when you're creating the purchase order, right, you're giving certain delivery date that I'm expecting this delivery date to happen. So based on that, system will be showing you that particular amount. Let me see if I can show you the actual report. Okay, these are all memo records which is created here. So okay, so here it is basically showing mostly the bank accounts. I think the planning groups are like that. But let's say if you have if you have certain purchase order or sales order, so based on the delivery date, we can also have a way to update the inventory, etc. And based on that, let's say if you have a business partner, let's say if a vendor, and that vendor has a planning group, and that particular vendor has certain purchase orders linked with it. So based on the delivery date, we'll be receiving the inventory, and that also can be reflected here based on the configuration. So that is how it can reflect. But here, I think the standard configurations are mostly banks. That's why you can only see the banks here, whichever banks are assigned to 1710. It may not be configured in that way, so it is not showing. But you can bring up those things also. So let us just go through the key terms that is used here. So cash position report. So this is a report to analyze the exact source of cash flow by navigating to the line item level, or further at a document level. Like even here, there is another app, as you just see. Like if you just click on this, it will take you to the check cash flow, display check cash flow items. So once you go to the cash flow items, it will show you at a document level. So we have such drill down functionality. Now, liquidity management and liquidity forecasting are not part of cash management. This is more of part of business planning and consolidation tool, which is for the medium to long term uh, forecasting of the future liquidity, right? Because generally cash forecasting is more of a short term cash forecast, but the moment to go for a very medium or long term forecast, that will depend on the planning or the budgeting, etc. So that is again something that is outside cash management, and that is more on the BPC or SAP analytics cloud tool, those kind of things, like group reporting, those kind of things, right? So now cash pooling is something that we can discuss. So cash pooling again is a very interesting concept that we can handle through electronic bank statement. Basically, this is being used for fund transfers between bank accounts. We have discussed payment request, which is more of a manual process. Cash pooling is more of an automated way of handling the same mechanism. I can discuss on that also. So functionality is again a generic SAP term for the organization unit. GL account you all know, post-trade period you all know, so there is really nothing to discuss here. So here we are giving certain Fury apps like cash flow analyzer, which we just showed, displays the aggregate amounts and NITM details of cash position, medium and long-term liquidity forecast, and actual cash flows. Then create memo record. This is an important part of cash management, where basically we can use a app, create memo records to actually create some, something that I can forecast in the short term, which is the expected cash flow, but that is not yet generated in the system. So for those kind of things, we can use such cash forecast. Like for example, someone asked me, Renew asked about the purchase and sales. So purchase and sales will probably only impact your inventory account, but not your actual bank account, right? But let's say if you are 100% sure about receiving that money, then you can also create memo record for such cases, and you can bring it in your cash flows also. Then you can again display the memo record through the display memo record app or FF65 in transaction code to GUID. So the objective of cash management process is to monitor the cash positioning and manage the liquidity of an organization. It helps an organization in making decisions related to investment, borrowing and sufficient liquidity to cover the current and future payment obligations. So as I mentioned, the working capital part, like I'm going to, should I be able to pay my vendors on time, some of the liabilities which is coming up, or my employees on time. For those kind of obligations, you could always look at this cash position reports. So again, we are just looking at the cash position report and liquidity management, trying to understand the difference. So cash position report is used to analyze the cash flow by navigating to the line item level or further down to the document level, and it has various analytical dimensions, like bank country, bank group, company, bank account currency, and so on. And liquidity management is more of a medium to long term liquidity forecast by getting into the forecasting of the future liquidity. This helps in long term investment or business plans or even acquisitions. So although the focus is on future cash flows, but to analyze the use and source of cash receivable and payable, it can consider the historical cash flow data as well, because in the future is quite uncertain. So sometimes we can extrapolate future, historical data of last few years to extrapolate into the future. So again, that is not exactly in our scope. That is more of a business planning kind of a thing. So basically these are the activities that we need to perform as a treasury manager or cash specialist. Need to perform this kind of activities to effectively manage the liquidity. Collection of inflows. So this is nothing but you collection of your money from customers into various constitution accounts. Then the disbursement part. So control the timing of the outflows and maintain the accurate insights of the disbursement of the entire group. So basically, payments kind of thing. Then management of the daily cash flows. Control the bank account balances across all banks and monitor inflow, outflow, and fund transfers and payments. Liquidity forecasting we discussed. And short-term funding is similar. Like for example, in case there is some deficit of cash and you want to do a short-term financing using your credit lines, you can do that by creating certain loans. And again, let's see, if you have certain cash surplus, you can do some short-term investment also. So these are the activities. Infrastructure and risk management, again, this is more of like a little advanced, so let's not get into those many things for now. So cash pooling, again, we'll discuss cash pooling also. So cash pooling is also again mode of automated way of transferring the money. So let's talk about the benefits. We already know that it is important for the CFO or the controllers to make certain decisions, but this has got multiple benefits. Like this is going to help you improve your working capital position by having enough cash in hand. Then analyze the enterprise-wide cash requirements and current exposures. Exposures again we'll discuss separately. But let's say if you even want to use this report to at least understand your exposure in foreign currency, you can also do that. Then it provides visibility into expected cash needs and forecasted cash receipts. So same like receipts and payments. So since you have the cash flow based on your incoming and outgoing, that is why you also have a very clear visibility on your short-term receipts and payments that is coming up. Then monitor the daily cash position and projected cash forecast. Checks real-time cash positioning to prevent bank balance overdrafts. That's fine. Reconciles the bank statements and products unauthorized usage. Let's say if you have a short-term forecast, you know that this is what is coming up, and if someone is trying to do any fraud, it's easier to catch. Segregates duties explicitly to minimize frauds and misappropriations. Maximize in the disbursement floats and enables cash pooling and fund transfers between accounts, and manage the excess cash or meets cash deficits. In case you have excess cash, you can invest. Now we basically see cash management. See, conventionally, cash management has always been linked more with your bank accounts, right? So that's why one of the most important steps of cash management is your bank statement integration. The reason is that because some companies still do not consider, let's see if I'm doing a proper cash position, then some companies may tell you that I will not consider anything that is not in my main bank as my cash position. So in that case, you have to import your electronic bank statement. Then only once the clearing GLs will hit your main bank, you will actually be able to consider that. So that is one of the first steps to import the electronic bank statement automatically. Then you review the opening cash positions. Then let's say if you think that the cash position does not look correct because you have not considered certain upcoming planning, that is, that, for example, you're going to invest and buy certain land or factory in next month, but that is something that is only in your mind. So there is no system to record that. So then you create and verify the manual memo records. Then you review the cash position once again with these new memo records in place. And once it looks fine, then you review the liquidity status and decide whether to invest or borrow. So that is the overall flow, high-level requirements of cash management. So this is one of the examples of some of the requirements that one of my clients gave, that what are the things they're looking for when they want to implement cash management. So they have mentioned that they want the cash management flows along with the supply chain financing and factoring should be available. So basically, in one of my clients, I had factoring and supply chain financing activated. So do you guys know? I gave some insights in one of the previous questions, but do you guys know what is this financing and factoring about? So basically, recourse is nothing but it hails the company personally liable, and non-recourse where it's like a pure debt, which that you're just taking from your, from the bank. So there are different ways in which you can integrate these loans. So our client wanted to integrate this factoring financing along with the cash management flows. Then again, they wanted to make sure that we have the credit facilities and limits available to be used in case we have to or take a loan. We should make sure that we use the credit facilities. Then they also wanted the cash forecasting should be done at a plant level, though that can be again a requirement of your client. And the impact of liquidity planning due to the expected price movements of the major raw materials should be analyzed diligently. So actually this client had a lot of export and import. So what happens is when your company is doing a lot of export, And if it's a manufacturing company, then let's say if they have an inventory, let's say it's an Indian company and they have created some goods. Let's say it's an electronic manufacturing company and they've created mobile phones. Since they know that they're going to export these mobile phones to US or Europe, that's why they will track this inventory in a certain currency, and that currency again should be part of in case they want to bring that into the forecast automatically, then they can probably tell that let's say I'm in let's say exporting 20% of my mobile phones to Europe, 40% to US, and let's say another 20% to China, and rest is in India. So they can basically give that bifurcation. And again, this is not something SAP standard can handle. You have to implement a custom program, but there can be scenarios like that where they want to consider the inventory also as part of the cash management. So these are some of the examples how you can receive requirements for your cash management flow, and you have to consider that accordingly. So this is nothing but the cash flow analyzer screenshot that we have already seen in the previous screen. So yeah, so this we already discussed this, the bank account management part, where bank account will be bank account management is nothing but your same house bank concept that was in ECC, and in S4 now we name it as bank account management, where you will have master data like banks, bank accounts, all these things. That is obviously a must. Then you need to have your daily cash operations, where it eliminates the challenge of reporting bank account master data along with the bank hierarchy and bank account group. So in case you want to do that, you can do that, because in cash management configuration, when you go to the configuration, you will see something like grouping. So based on the grouping only, we can understand this cash management forecast. So in current bank account management, you already have such grouping in place. I mean, a lot of companies don't implement this, but we have such grouping already in place in bank account management. So we can also use that. And Treasury Department can definitely track the bank accounts by performing the bank account inventory and other PT reviews. So again, as we know that bank account is not a configuration anymore, it's more of a master data for us. And directly the users can keep a track of that. So, okay, so I don't want to get into a lot of details into this. These are very similar things we have also already discussed, that bank movements, cash items, AP, AR, PO, SO, memo records, then treasury, cash flow from money market, forex, trade finance. So whichever areas will impact your cash position, all this can be integrated to your general ledger, short-term cash forecast. These are some of the requirements which we discussed, that cash planning should be, cash flow planning should be initiated by different during the period, region, level, basically the way they want to see the filters, right? Then the treasury manager will be responsible for certain actions, right? Site CFO again will be doing certain approvals. So again, this is very specific to a client. We can probably ignore this. So as we discussed that in cash management process, memo records are used for planning purpose. Like the example I gave, let's say you're planning to buy a factory or a land in the next month, and you want to just put that as an example. So while creating the memo records, revenue or expenses are entered manually in the system, and they're not transferred into actual accounting. So it is more of a just at a planning level. Now, while planning the memo records, we can differentiate between the two, which is actual payments and planned payments. That obviously memo record is a planned payment, and memo records are also one of the data sources for cash management reports. Let's say you are planning to spend money for refurbishing your plant or your machinery in the next month. Actual posting at this time, but you know that you're going to spend money on that on next month on a certain machinery. So that can be a expense. See, you can create types of, again in memory code, there are different types, right? So based on that, you can create what type of memory codes you want to create, but there is really no integration as such. This is just for the purpose of your cash forecasting that you are creating for the time being. So you're got it. So basically, your confusion is that how will the system understand that I have to track this, right? That is
some key factor which system will recognize and consider this as an one of the item in the cash flow.
okay. No problem. Let me see if I can show that to you so that it will be a little easier for you to understand. First, let us probably create this memory record and then we'll see if I can show that to you. So this is an existing memory record that we have opened up here, but let us probably create one new.
All right, let's test your knowledge. Here's a question for you. Which of the following is not a key process area covered by the integration between SAP Treasury and SAP Finance? Option A, cash management. Option B, accounts receivable. Option C, bank account management. Option D, inventory management. Take a moment to think, and when you're ready, choose the correct option. Remember, each choice holds a key to unlocking the answer. Good luck! Type the correct answer in the comment section. Hey there! Want to master SAP FSCM Treasury Integration with SAP Finance? Our course has got you covered. You can learn at your own pace on our platform. In this course, you will dive deep into SAP FSCM Treasury Integration. Think of it as a toolkit for managing money flow and finances efficiently. From the basics to advanced strategies, we cover it all. Our experts have crafted this course with years of experience. Your instructors are seasoned pros, ready to guide you through every step and clear any doubts. And guess what? Our students rave about this course. Folks just like you have found it incredibly beneficial. Plus, it's budget friendly. Learning this valuable skill won't cost you a fortune. Ready to ace SAP FSCM Treasury Integration? Enroll now. For more details, visit ZaranTech's website.
How to understand like what type of memory code I can create. So this is how you basically choose your planning levels. Like these are some standard planning levels which is already in the system. You can also create your own planning levels in system, and you can choose when you actually create the memory record at what type of memory record this is. Like outgoing check, outgoing bank transfer that you expect, incoming checks, cash receipts. So for now, let us probably just use outgoing checks, and let's say I'll give you $5,000. I have to give the bank details. Let's say I'll give USBK1. So I can give value date as even tomorrow's date. Let me give tomorrow's date. Now I'll click on create. So memory code number 82 is created. I can even see it here, 82. So now if I search, yeah, you have value date shows. Right? Let me take tomorrow's date. Okay, I think it was in euro. I have not given USD, and I have given USD as a filter. That's why it is probably not showing. So this looks like a create cash trade request. So basically, that will depend on the planning level, like what kind of thing that you're planning, whether it's an outgoing or it's an incoming one. So basically, see, it's not like an actual transaction, right, where you're debiting your entry. Like generally, debit expense, credit sales, those kind of things we do. For that only, you have got the outgoing and incoming, right? As you can see, the design is like this. You can give the amount, you can give the planning level. Exactly. So let's say now if you go to cash flow analyzer, let's say industry by AB and industry by. No, so that's what. So basically, this is a design in which SAP has given. One is your normal debit credit that is anyway coming from your actual posting. The other is more like your memory card that you can use to control, and based on that you bring up this additional forecasted figures. So there is no error message. So again here there are certain things like non unreconciled items, etc. So it can come and sit there, but how you track in which particular part you want to bring it, so that is difficult without the planning level.
Hey there! Want to master SAP FSCM Treasury Integration with SAP Finance? Our course has got you covered. You can learn at your own pace on our platform. In this course, you will dive deep into SAP FSCM Treasury Integration. Think of it as a toolkit for managing money flow and finances efficiently. From the basics to advanced strategies, we cover it all. Our experts have crafted this course with years of experience. Your instructors are seasoned pros, ready to guide you through every step and clear any doubts. And guess what? Our students rave about this course. Folks just like you have found it incredibly beneficial. Plus, it's budget friendly. Learning this valuable skill won't cost you a fortune. Ready to ace SAP FSCM Treasury Integration? Enroll now. For more details, visit ZaranTech's website.